Okay. Yeah, before starting, let's talk a bit over. For you, it's first time to come to Argentina.
Yes, right.
Yeah.
Yeah, yeah. First time.
Yeah. What do you think in
That's
Argentina?
great. I mean, I
All
think
right.
the energy is great. There's a lot of builders here. I'm seeing a lot of amazing projects that are building in the AI space, especially. And so at Zero G, Zero Gravity, AI is our main focus. We are building the world's largest AI L1 chain. We have a lot of capital behind us, a lot of institutional support as well. And I want to go into it with the slides. It's easier to visualize it that way. So we'll just see if they're able to fix it.
Right. Yeah. The AI is obviously has a narrative at the moment, and I'm very excited to see what's gonna happen, with zero G and all, the ecosystem. Actually, I would like to know, who's builder here? The developer. Oh yeah, yeah. Around half of them. Yeah. So that's really nice. Actually there's a East Global later on. So if you intend to go there, so maybe that's a chance to shine later on. Seems like still have a problem of the slides. Let me just double check. Okay.
All right, maybe
okay.
I'll start without the slides and we'll get it later. So Zero G is building, as I mentioned, the largest AI L1. We are EVM compatible. We have what we call a modular decentralized AI operating system. And this operating system, oh, perfect. There it is. This operating system basically has three core components. The first is a decentralized storage network. The second is a decentralized compute network. And the third is a data availability solution. And so the goal at Zero G really is to bridge the gap between Web 2 and Web 3 AI. And in order to do that, we had to re-architect the entire tech stack from the storage side to compute to data availability and then to the chain. So we have a really stellar team, right? So we have seasoned operators, 4 co-founders, all of which have been have built unicorns before. We have some blockchain builders as well. And we have around 85 people in our team. I lead the partnerships. I'm not a co-founder here, but I am also an investor in Zero G. And I invested last March, and then I joined as an advisor, and now I lead the partnerships. So this cycle, if you see, a lot of people work for their bags, right? And so I'm doing that. I'm working for my bags here. Okay, next. So here's some of our fundraising and our cap table. We're very fortunate that a lot of people believe in the Zero G's vision of a decentralized AI future. We've raised over $350 million from a bunch of tier 1 VCs. Some of these VCs as well are non-Web 3 VCs. So the Web 2 VCs, especially those in the AI space, really believe in the fundamental tech that we're building as well. And we're really excited because a lot of this funding is going towards you all. So what's the main problem we're working on? The issue is currently a lot of AI systems work within a black box. And what do we mean by black box? What we mean is the input and the output are maybe visible, but what happens, right, within the AI model is not as visible. You don't know what's actually occurring. And so there's issues with transparency, with trust. There's issues with data verification. There could be model weights and biases which are not in line with you. So the alignment issue is a big problem. And so Zero G is working on fixing all of those problems. And for that, we needed to re-architect the entire system. So this is our decentralized AI operating system, which I talked about before the picture came up. We have, you can see at the bottom, a decentralized storage network. We have the compute network. We have data availability. And then we have a service marketplace and applications that sit on top of it. And so all of these tech stack is basically modular. You can use it on any chain you're on. But if you want the best performance, you should use it on our chain itself. You'll get the fastest transactions, the cheapest fees, and its seamless integration of this fully vertically integrated stack. The decentralized compute network is particularly of interest. It allows you to do decentralized inferencing and fine-tuning and data verification. The marketplace allows you to host AI models. So we know a lot of people are building decentralized LLMs or using their own custom LLMs. Well, you can host it on Zero G. And you can do something that you can't do anywhere else, which is have the community participate in the training of these AI models. And so this is something interesting where the economic value of AI models can be distributed back to the participants who help train it, right? When you use ChatGPT and OpenAI, you're paying a subscription fee every month, right? Now, what if I were to tell you you're actually helping the enterprise value of OpenAI grow every time you use ChatGPT? Are you getting any reward from that besides a better product? No, right? So in decentralized networks, the benefit is we can track and trace, the on-chain provenance of the contributors to this distributed system. And then what we can do is say, hey, you contributed so much for this model. Why don't we share some revenue back to you? Or why don't we share some tokens back to you? Right? And so these are things that Zero-G is thinking about, of distributing value back to the communities and builders who are contributing to the system. We've come up with a new ERC standard. So I know Devconnect is very ETH focused, and so we are very ETH aligned. We are EVM, and we also have this new standard which was approved by the ETH Foundation, I think, last week. And so this is a new INFT, or intelligent NFT. And what this does is it proves ownership of AI agents. Right? So right now, when you create an AI agent, what we've seen with these other ecosystem tokens is that they're just meme coins which loosely represent the agent. What we feel is that you should actually be able to trade the agent itself. And so the best way to bundle the relationship between an agent and the data and the owner and the model that the agent is tapping into, we think you can best encapsulate that relationship through an NFT. And so we've come up with the ERC7857. Another benefit that you can do with this NFT is you can fractionalize the NFT, right? And you can have many people come and participate and own this NFT. And what they're doing is they're owning fractional ownership of these AI agents. And then what you could do is you say, okay, I want to distribute revenue back, right? Let's say it's a DeFi yield agent. It's earning income. You can distribute the revenue back to the owners of the NFT, aka the owners of the agent. We have a very large ecosystem. We have over 400 projects building with Zero-G, a lot of supply side, a lot of demand side. I would say the number one integration point is our storage network. Our storage is super cheap and super fast. We're 80% cheaper than AWS. So I know a lot of you builders here, your number one bill probably every month is AWS, right? Why don't you take a look at Zero-G storage? I think you'll save a ton of money. It's super fast. We are the fastest cold storage network in the entire space at 2 gigabytes per second. And we are the cheapest as well. This is something we've done. We broke a record for model training. As I mentioned, our marketplace can host and train AI models. And we were able to train a 107 billion parameter AI model. So you can read about that in this research here. And we're super excited. OK, and so here's something that's also interesting. We launched this ecosystem growth program. There's $88.88 million in there. And what we're able to do is basically invest in projects that are building on our chain or using any component of our modular stack. And if you're interested in applying for some funding, some investments, some co-marketing, and strategic support, you can scan the QR code at the bottom right. And please do apply. So thank you, everybody, for your time. I will be around if you have any questions.
Yeah, click. Amazing. As a partner of the Zero-G, as AKINDO, and I'm very excited to see what's going to happen with the AI and the whole ecosystem to change for the Web3. So the next up, so we had amazing guests as well, from Ethereum Foundation, which is building this whole community here, and I'm so excited to have him here. Hey, Adrian, thank you for coming here.
Thanks for having me. Hey guys.
Please give a round of applause.
Oh, thanks. Hey guys, so I'm Adrian from the Ethereum Foundation. I lead the founder success team, which is a relatively new team here at the Ethereum Foundation. Raise your hands. Who here is a founder? A lot of people. Nice, I like that. Who here is an investor? And you can be both. Yeah, we're all kind of investing in some way, or we're investing our time, right? We're here. So I think what's traditionally been the case with the EF is that we didn't really have a lot of outreach in terms of talking with founders and investors. And I know this because I used to be a DeFi founder myself. But this is the first Devconnect where I've seen this kind of event being held inside an Ethereum Foundation run venue, and I think it's very exciting. Wouldn't you guys agree? Yeah, yes, that's right. So I think these guys have been doing a great job. I actually spoke at their events before. The AKINDO guys here, and I think this is kind of a new era for a lot of us because we're able to actually engage with each other. We're actually helping founders and investors, you know, on our team especially, like there's like only 3 of us, but we're trying to expand and we're trying to be engaged and really literally just being in the same room as you guys, because that's something that we weren't able to do before, you know, with the structures that were in place. But now that we're here, we're very happy to be engaging with you guys. And it's not just like me coming up here, it's, you know, speaking for 3 minutes and that's like the whole job that we're doing here. We did actually a couple days ago, I don't have photos for that, but you can keep an eye on the Ethereum Foundation Twitter. We actually ran a mentorship session for a bunch of founders, and then we also had a networking founders night, which I think I saw a lot of familiar faces here. A lot of you guys actually went to, where we were very intentional, kind of similar to here actually, trying to bring together people. We had stickers that indicate who's an investor, who's a founder, what vertical they were in, you know, if someone was hiring, if someone was a BD person. You know, I think we want to be a lot more intentional about how we're supporting founders in our ecosystem. And of course, like I said, we're a team of 3 at the Ethereum Foundation. We can't support the entire world. So that's why we work with great partners like AKINDO to get this kind of thing done. Now, of course, this is their event. I don't know the details of how everything's going to run, but it seems very exciting. I met some of the other judges here while waiting to come up here, and I think it's just a really great opportunity, you know, obviously for founders, but also for investors and for the entire ecosystem as a whole. So anyway, I hope you guys have fun. I think there's a lot of very interesting products out here. It is the Friday as well, so relax a little bit and you know, enjoy the show, I guess. Thanks, guys.
Okay, thank you for the presentation, Adrian. Okay, so from now on, we're going to start the core event, which is a pitching event, demo day. So from now on, we have 2 sessions. The one is about seed round. So seed round pitching. So and the next one is going to be actually, like the first one is going to be pre-seed round, and next one is going to be seed to pre-series A round. So here's you can see like actually when you pitch to the VC, what's going to happen and like what kind of question you had. So kind of like experience it together. So and we love to invite the all amazing the elite judge for today. So please come to the stage, guys. Yeah. Yes. Yes, I think you can come. Okay. Oh, good. So yeah, today I'm very excited to have an amazing guest and as a judge. So from now on, like, I'd love to hear the introduction from each. So maybe start from you, Jared.
Hey guys, I'm Chao from Irish Tree Ventures. We are a crypto native fund based in Hong Kong and New York City. We have been investing in this space for 8 years, since 2017, and we have more than 120 portfolio companies. Thanks.
Okay.
Hey everyone, Alex from Maven 11. Similar to ISG, we've been investing in the space since 2017. We're currently investing out of our 3rd fund. It's a $107 million vehicle, mostly focusing on pre-seed to seed stage deals, but we do a couple of Series A's here and there. Been very active in the DeFi space recently, previous with the other funds, more on the infrastructure side. But yeah, excited to see this panel.
Amazing.
So I'm John, I'm accelerator lead at Outlier Ventures. We write early stage checks as of now 200K on pre-seed seed, any vertical to be honest. We have been investing since 2017 and looking forward to see the pitches.
All right, my name is Yanis, one of the founders of WTG Ventures. We are a family office based out of Switzerland. We invest directly in companies, pre-seed to Series A. We invest in hedge funds, and also we do some private equity deals.
Hello, my name is Jan. I'm part of the Safe Foundation, so the team behind Safe Labs, Safe Wallet, what you know. We invest in teams as a follow-on investor with a very strong focus on self-custody. So those teams that make self-custody either secure or easier to use from a tooling perspective or for the user, those are the kind of teams that we primarily focus on.
Hello everyone, my name is Nicolás. I'm from Lucero Ventures. We are a early stage crypto and AI VC based here in Argentina. What we try to do here is to invest mostly in the LATAM ecosystem, mostly in crypto and AI startups. We're a $20 million fund and try to do checks from around 100K to 500K.
Amazing. So I'm great to have all of the amazing judges for today, and I'm very excited to see what kind of spark today we have. So guys, I would love to invite the first pitching project to the stage. So yeah, please come here. So yeah, first pitching project is a PreA. Please give a round of applause and welcome him.
Thank you. Is there a clicker? It's a clicker, right? Question. This is to move forward, right? This is to move forward. Is it starting? Oh, it's starting. Okay. All right. Buenas tardes. My name's Kevin from PreA, and we're building the agentic DeFi crypto portfolio for institutions. So DeFi is fast, fast-moving, fragmented, and full of risk, especially for institutional investors. We want to help them with Dr. Hero. It's an institutional copilot for institutional funds. It takes in investment queries, risk parameters, and then outputs the and automates the executions for them. We greatly streamline their execution process so they can focus on more higher level investment strategies. We do this with our own in-house agentic platform, Node AI, powered by 0G's, OG, AI infra, and compute. And we're also non-custodial. So we're launching the Pilot Partners Program, where we're currently working with a few funds, on-chain allocators, to work with them and get their feedbacks, co-create Dr. Heroes. We're currently targeting crypto funds, but we're also, next plan is to move to larger TradFi, who are interested to get more exposure to crypto. So this is a really amazing team. We are a mix of TradFi, AI, and Web3 with a lot of experience and ability to ship. So we're currently fundraising a pre-seed 1.25 million of SAFE. This money will be built the AI portfolio intelligence and also for the execution of the pilot program. So if you guys are interested in looking to be part of the coming of age for AI crypto to get to institutional adulthood, definitely feel free to hit me up. Thank you.
So let's go to the Q&A session. So if you guys have anything as investors, it would be great. Go ahead.
Hi. Hello. Hi. Thanks so much for presentation. Can you talk a little bit about go-to-market, how you're gonna get your product in hands of the institutional players?
Yeah, definitely. So we're already in talks with a few of the funds, family offices, and that is part of the pilot partner programs. And then so we're working on working closely, demoing, and then putting it into the hands of them and finding out what are the interesting opportunities and strategies that they would like to use with Dr. Hero agent.
Anything else? Go ahead.
I wanted to follow up a bit on his question, and it's two questions actually. One is, what has been the soft validation from your potential clients that made you decide build this? And as a second question, what is the differential feature or what makes it different against other DeFi copilots that are out there?
Yeah, I think that's a good question. So for the first part, so it's more about having the demo, and then we're currently showing the demo for them, and then getting their inputs about the feedbacks about how this can help with like the portfolio generation process. And one of the examples mentioned is about the ability to invest in like treasuries, especially with a lot of the like upcoming vaults that are coming here, especially different ones that are delta neutral. And then for the second one is like what makes us different is our first is like our AI capabilities. Our team is mostly from the AI space, and we actually built a lot of the agents over the last 1.5 years. And then we also have experience in the TradFi space as well. So we're kind of combining them together.
Anyone?
Sneak in one last question. Just kind of curious on your perspective. Institutional clients, a lot of them have a research team that spends a lot of time sort of looking for opportunities. But I do feel that your product is well suited for a newbie in crypto, right? There's many opportunities on Pendo and etc. Is there an angle here for a more sort of consumer, tool?
Yeah, so going back to the institutional, that's why it's a co-pilot. For example, coding co-pilot is actually best for like senior programmers to have a co-pilot. For this, we want to make it flexible that like clients can make even more complex like strategies and then have it. And so it's more of a like intelligence execution of that. And then we're also looking to target more TradFi who are looking to get more exposure, and they may not be as experience in the space, and then we're also helping out by either providing certain strategies or like having like leveraging the like outsourcing potential strategies as well from third parties.
All right, so then now we finished the old stuff. So please give the round of applause. Okay, so next up we have another project from Voyager. Are you ready?
Hi guys.
Yes.
Nice to see everyone. Yeah, nice to be here in Buenos Aires. Hi Sharks.
Please give a round of applause to him.
Hi guys, my name is Alex Bowman. I'm the co-founder and CEO at Voyager, and we're building an AI native ecosystem around real world assets, specifically in the commodity space. And our mission is to make it easier than ever to trade gold, silver, and platinum against digital assets. And when we first started digging into this problem, we found that there were a lot of issues around transparency and cost and just the access that both retail and institutions are going to have around these assets, particularly when it comes to Web3. And the reason being is because there isn't enough digital asset liquidity alongside those RWAs. So we've been very, very focused on building the critical infrastructure that's required to be able to solve those problems. So what we've done is we've partnered with all the best companies in the game. So Chainlink and Fireblocks and CRG were so kind to give us the opportunity to speak today. So what we've really been focusing on is taking the data availability, the storage network, their layer 1, and bringing all of those things together with the suite of products that Chainlink has, so proof of reserve for asset verifiability and all of the advanced data that you have with Chainlink, and then bringing all that together and marrying those things into what we believe is going to be a next generation exchange platform. So we're very excited to be here. I know this is a very short pitch, but yeah, I'd like to open it up to questions.
Thank you for your pitch. And okay, let's move forward for the Q&A session.
Thank you very much. Can you talk about your business model, basically how you make money, and also how you differentiate with other tokenization of real-world assets?
Yeah, so this is imagine the same model as any other exchange, but like Bybit, they have perpetual futures on Bitcoin. We're going to do the same thing on gold. And it's going to allow users to be able to trade on a very tight spread. So gold has been one of the best performing assets over the last 4 years. And we want to give people an opportunity to be able to take advantage of that move.
Question on distribution, right? Getting this product in front of people. Obviously, it's a competitive space, especially around perps markets. There are other venues to trade commodities. Sort of, what is the angle here? What do you think is sort of the defining feature that makes it advantageous to trade on your platform over another platform?
Yeah, I think for the people that are interested in the technology, we're going to be able to do things on chain that other exchanges haven't been able to do in the past. Working with 0G, the instant finality, 40 millisecond response time, and the transaction costs are much lower on 0G. So that's going to enable us to have spot pricing and bring retail users, and then also be able to do very, very high volume transactions at a very low cost that other people wouldn't otherwise be able to have.
Amazing.
Maybe a bit naive of a... Does it work?
Yeah.
Okay.
Be good.
Maybe a bit of a naive of a question, but when you started off, I understood that you're bringing in an AI part and that it's about an ecosystem. At the end, it sounded like it's an exchange. I'm not really 100% sure what it is.
Yeah, so we're combining the best components of what 0G has done with their AI native ecosystem with some on-chain trading features that we've been co-developing with some of our other partners. The long-term vision is to go from natural language to smart contract execution. So I should be able to say, hey, build me a trading strategy on gold over the next 6 months with leverage, and it'll be able to go and build that strategy for you.
All right. So yeah, it was a great pitch.
Thank you guys. Appreciate it.
Okay, so next up, we have another project. He's from the Tokeniza protocol, and please welcome him with a round of applause. Yeah.
Hello, I'm Michel, founder of Tokeniza. We are real-world assets in Brazil. We are building a bridge between closed Brazilian assets like real estate and global DeFi that don't have real yield. We are transforming these assets, the real assets, in tokenized assets with our stablecoin, with real assets DeFi protocols, with PIX. PIX is a Brazilian payment way on ramp and off ramp, and proof of reserves connected to central bank. We are the first regulated real assets in Brazil, and now our protocol offer end-to-end solutions to real assets like regulate tokenization, automate yield distribution, QIC integrated with compliance, and things like this. In numbers, we tokenized $6 million in 2 years of operation, 14 to 15 million of transactions on chain. We are now in 4 different blockchains, 6,000 active users, and now we are looking for expansion to global investors. We're looking for tokenizing in Brazil and sell this in other countries. The projection, we are looking for $30 trillion in real assets in the next 5 years. We have a revenue model with 5% fees, origination, distribution, white label, and revenue share. And we are ready to scale a bit and high margins. The next steps, we are finished the first step, and the next step is grow to European Union. We are doing this in Portugal with Mika, and in the next years we go probably to Latam or Asia. And finish. It's okay. It's okay.
Okay, so yeah, let's go move forward. Yeah, anyway, please give a round of applause to him. Yeah, so anyone has any question? Please go for it.
Hi, thank you for this presentation. Can you talk a little bit about how you are thinking about redemptions for these liquid assets? Because that's typically one of the hardest problems. The more higher yield you have, the harder it's actually to redeem. How you're thinking and what kind of assets actually you're planning to tokenize.
So, sorry, I don't understand. What is the problem? Do you think?
About redemptions. Can you talk about how you kind of tackle redemptions for illiquid assets that you will tokenize?
Okay, we have our own users that make liquidity. We have some partners with like banks to liquidity too. And today we are looking for this expansion to another countries, looking for different users that invest to these assets. But today it's not a problem that we have a secondary market for this. A lot of transactions on chain that user buy this asset and don't rate all the time of this asset and sell first.
So I saw at one of the slides that you had 6 million tokenized assets and 40 million on-chain transactions. Could you detail from those 6 millions, which is from the several categories that you were saying you were tokenizing, does that come from, and what are these on-chain transactions for? Do they generate economic value? Are they transacting something in the platform? Or?
Okay, it's everything. It's on chain, and in Brazil we have 641 with dollar. So 6 million. It's 36 million in Brazilian reals. So it's about 2,000 reals for each user that invest.
I mean, if those assets that are tokenized, those 36 million reals, are on real estate, are from the stablecoin that you were discussing, or some of the other two asset classes that there were?
Yes, it's everything in stablecoin, on chain, each NFT with the compliance law and stablecoin connected.
Right. So yeah, please give a round of applause to him. Okay, so let's move for the next pitching project. So next pitching project is a prediction fund. Okay, so next pitching project is a prediction finance. Please give a round of applause.
Thank you. Hi. That's not us, though. Sorry. Yeah. Okay.
Okay.
Also get my notes. Still a bit hangover from yesterday. Just one second.
Okay, then let's talk a bit, yeah?
Yeah,
So,
I have my notes.
So
okay.
it's first time for you to come to Argentina?
Yeah, beautiful country, great food, everything. Also great company, a great partying, everyone. Yeah.
Yeah.
I see
good
some
vibes,
familiar
yeah?
faces. Also maybe some of the judges from Rave, I guess. Did anyone go? No.
You're from Rio, you said?
No, from Rave.
Rave. Okay.
Yeah.
Yes. Okay. So
Okay,
now
this
it's
is a
ready. Yeah,
placeholder.
let's
This
go.
is the real slide. Okay. Hi. Hi, everyone. My missing us. I'm from PreA. We are the liquidity layer for prediction markets. So we all know that prediction markets are having quite a great moment right now. They are growing super fast and they are already big. So much so that right now, this year, they reached a total volume of over 30 billions. And just this year, they had a growth of over 369% compared to all the previous time. So just this year. But they still have some problems, one of which is this. Capital inefficient. What do I mean by that? Let's say that I have a prediction that is long-term, like let's say it resolves in a year. That means that my capital is actually locked in the prediction until it's resolved. So I cannot farm yield, get exposed to Bitcoin and Ethereum. I cannot cover any unexpected expenses and so on. So that means that I have a huge capital opportunity cost. So with PreA, we solve exactly this. We're unlocking the capital liquidity, the capital efficiency by letting you borrow liquidity using your predictions as collateral. That means that you can use your newfound liquidity to leverage your position or to do some hedging or to yield. Also, we are peculiar, we are unique in the sense that our protocol is also 100% solvent. That means that no bad debt can be created, and also it's entirely bulletproof against all kinds of black swan events. So, of course, this is possible thanks to a very strong killer team. And, of course, we're open to our pre-seed round. So if you guys have some 300K lying around, please join us. Thank you very much.
Okay, so now let's move forward to the Q&A session. So we have the two guys. If you have anything
All right, thank you. First question, of course, is around liquidity, especially towards the end of a prediction market life cycle. Like it's not a continuous market. At some point, there's a binary outcome. If you're lending against the position that's going to lose, well, then
Kind of a black swan, yeah.
yeah, exactly. So just explain to me how, for me as a lender, what is my risk here? Like, what is I'm going to need to charge a pretty high rate, right? Because there's a pretty high chance, or 50-50, depending, that I might lose my money. So just on that.
So it's actually under the hood, it's quite a complex system. So we still don't know like exactly how much of all of this to say, but maybe you want to answer this question. It's better.
Sure, he's a little bit nervous today. I don't know why. Usually he pitches way better. So basically, we used a Markov prediction model to fix this issue, because as you know, when a prediction goes to zero, basically my collateral is going to zero and bad debt is created. So that is the big issue on creating this product, and that's why there isn't a lot of competition right now, because they try to use risk models, but risk models are used in the option stock market to calculate the lambda and really can solve this issue. We created a very unique protocol and we also backtested this protocol by using, for example, the last election in America to check that it will be 100% of the time efficient and solvable, and it happened. So we have like our magic. If you want to know more, we can schedule a call together. I can explain to you in the very details how does it work, and that's it. Thank you.
Okay, I will run a very short question as we know we're almost on time. How are you looking at distribution partners, and where are you looking to be used to as collateral?
So currently we got incubated by Binance MVB9, and also we are joining the Polymarket Ground Protocol. So we found a very good help on bringing this project to the market, and we think that we will be ready for the Q1 of the next year.
All right. Thank you for your pitch. Okay, so next up is Kokio. So I'm excited to have you have the presenter. Please join us. Okay, are you ready? Here you go.
Hello. Hello everyone, I'm presenting Kokio. How much of you know about eSIM cards? Oh, very less. Okay. So basically, if you purchase like a SIM card, you have to go to probably here Kiosco to purchase it, and then go to the provider to activate your SIM card. In eSIMs, you purchase it online, scan it via QR, and you enjoy your connection in your travel. So let's get you all into the comfort zone of your traveling. Kokio, it's a mobile app that allows users to purchase eSIMs with crypto or fiat using smart wallets on the go. And you can install it purchase it online and install it via QR. We are built with ethos of open source, publicly verifiable source of trust, and mass adoption on chain. Problem. So this eSIM industry is very closed industry, and mainly whenever you purchase an eSIM, you have to rely on centralized databases from your purchase to your provisioning. Whichever operator you choose, your information is being shared in all scenarios. That's what the solution is. We built an open source eSIM smart contract wallet that works with passkeys. So it's a smart wallet tied to your eSIM. Whenever you get into the application, you onboard via passkeys, and then we deploy a wallet for you, and you manage your eSIM plan, top up and deletion by yourself, which at the moment is managed by your providers. So we are bringing more user actions to user via smart wallet, because why not? You're not a data subject, you're a sovereign actor. And yeah, that's the goal. Why Kokio? GSMA is the global regulatory body of all the specification around eSIMs. And they have mentioned that payments to cover operator consumer payment scenarios and customer international remittance. Basically, I'm sending you some money and you are paying the provider some money. If happens via crypto wallet and once deployed, it can solve the whole complexity of, is the time up? Really? 2 minutes?
2 minutes.
Oh, I didn't know.
Yeah, that's what it happens. Yeah, so okay. you can just add some words last.
Yeah, we are a team of 3. We are 3 co-founders for 5 full-time equivalent people. I work in applied cryptography engineering and dApp developer. We have Manol, he's a public blockchain ecosystem developer since like past 5 years. We have Tanmay, who's previously worked at CPU, GPU verification engineer at NVIDIA. Now he's joined our full-time team. You can go to kokio.app and try the alpha today. We have sold around 27, we have users of 27 and they purchased around 40 eSIMs since past 4 days.
Yeah, please go for it.
Yeah, thanks for the presentation. I'm curious, how's this comparable to Helium Mobile in terms of pricing and user experience?
Yes. For example, we have two suppliers, eSIMGo and Iralo. Iralo gives us the coverage around the globe with 200 plus countries. eSIMGo gives us cheap, unlimited plans, so sufficing the user need. And whenever you purchase from them, you need to sign up via email or mobile number, basically creating an account. And then whenever you purchase a plan, it's basically mapped with a JSON object. And some providers remain forever, some providers vanishes. In that scenario, your data is in basically a centralized databases. And whenever it's leaked, it's really bad in plain text information. So with this, it's just unique identifier. There is no user information, so there's no worry about like losing your information anywhere, even if it's leaked. But yeah, it's smart wallet. You control your wallet. It's self-custodial. So the very difference is like we are bringing usability of cryptocurrencies in daily life necessity. And yeah, with smart wallets, like you control your actions, your purchase, and your deletion of eSIMs. Yeah.
Okay.
Maybe one comment and one question. I think for one, it's quite interesting because it also can help for Sybil resistance. Like, it is very interesting to connect telco and wallets in such a way. The question for me a bit relies the companies you mentioned, like Iralo and so on. How do you see them not, if they see this succeed, just implementing it themselves?
I mean, because Iralo and all these companies, they have been building eSIMs. eSIMs, like build out of eSIM took 15 years. And Iralo is like the best provider. And there is they face a lot of complexities and intricacies serving the users. They can upgrade to new technologies, but serving the user is their first need. So if someone like us who have built out the modern infrastructure, then it's very interoperable with Iralo itself. So we can discuss, we have partnered up with Iralo and we can discuss the possibility of using our infra to them. So this is our next goal, but yeah.
Okay, so that's the end of the presentation.
Thank you so much.
Please give it a round. Okay, so next up, we have the PreA. So please welcome the PreA team. There you go. Go ahead.
Hey everyone. So half of the crypto trades will be done by the AI agents in the next year, and trillions of dollars of assets would be managed and like influenced by the payments of crypto agents. But there is a problem. So crypto wallets are not ready for AI agents yet. So there's no great access control mechanism for the existing wallets. There is no transaction guardrails, and there's a really great complex setup that is needed to basically set up agents into this ecosystem of existing wallets. So we are building agentic account infra to delegate access control to these AI agents. So think of it as like you basically are giving access to agents to do some transactions on behalf of the user. So here's a tech infra of PreA. So we have Safe as our core account layer. So on top of that, we have like account abstraction ecosystem where like it's a modular ecosystem on top of the Safe account with the sorry. So we have like a modular ecosystem on top of Safe accounts where we can do. I'm sorry about that. Yeah. So we have a consumer app where we can actually create token confirmations, add tokens to delegate. Sorry.
Maybe to ask a question.
Sorry, can I do it again? Is it possible?
Yeah, because we have the time. But I have a quick question to you. Obviously, like delegating access to an AI agent to sort of use my funds to do different DeFi strategies obviously comes with some sort of safety concerns. I'm just very curious, how do you sort of build this out so that whichever AI agent that I'm using is sort of safe to use? It's not gonna suddenly send money to someone else's address or wallet. How do you sort of guarantee the safety of the users who's using the AI agent there?
Basically, we have a delegation infra that is like using the account abstraction stack, modular account abstraction stack. So we have this session key on top of it, so that we give limited access control to the a safe account. So yeah, that's like I wanted like one more go if that's possible.
Yeah.
Can I do like
the time was up. Sorry.
Yeah, I think we're very tight on schedule, but I just want to make a small comment, and it's like no one knows what you were gonna say. So like
Sorry?
that when you are pitching, no one knows what are you gonna say.
Yeah.
So if suddenly you forget what were you gonna say, just go on, like on to the next slide and keep going. Like it's fine.
Sorry.
Anything else?
Yeah, actually, following up on your question, I think that's an important. I mean, about agents, the problem is also they hallucinate, right? How do you protect against that?
Yeah, so we have like this, delegated accounts, delegated access control on top of safe account. So even if it hallucinates, actually we revoke permissions anytime, track, all the like whatever on it, like we will be able to, monitor that, and you can revoke access control at any time. It's possible.
All right. So yeah, thank you for your pitch, and please give a round of applause to him. Okay, so the next up, we have ETH agent. So who is coming? Okay, are you ready? Here you go. Okay, this is clicker.
Hello, I am the author of ERC 8041. I'm also a contributor to ERC 8004 agent registries on Ethereum, which is a standard that is being rolled out very soon. When I was working on ERC 8004, I realized there was a problem. The problem is that ERC 8004 agents are in a collection that is unlimited mint. There is no fixed supply. ERC 8041 solves the problem. It introduces a fixed supply collection of ERC 8004 agents. We are also creating a launchpad that makes it easy for anyone to create a collection of 8004 agents. And the reason we're doing it now is because ERC 8004 is being deployed live onto Ethereum in the next couple of months, weeks actually. Everyone knows that NFTs are dead. But agent NFTs have just been born. They are in their infancy. This is how it works. We have ERC 8004 agent registries, which are unlimited supply. And ERC 8041 allows for fixed supply collections of 8004 agents. The app makes it simple. We have a simple flow for creating a collection. This is our Explorer. This is the agent collection view with agents. And we also have the agent view with the 800 mint number. Our account, X account, has over 500 followers, and more are coming in every day without even creating a single post.
All right.
Quick question. Can you sorry. Thank you. Can you give me an example of a way that we can use this model? Sort of, what sort of use cases do you sort of foresee? What is sort of like interesting in your mind to sort of use and sort of use these collections?
Yes, everyone wants to know what are these agents, but I think that we need crypto economics. So we need developers to start building them, and the only way we can start having developers come in and build agents is if they can have collectors who want to buy those agents. And so just to give one idea, which I've toyed around with recently, it's the Warren Buffett agent. So the Warren Buffett agent is a collection of, like, say, 1,000 Warren Buffetts. You can buy one, and all it does is it looks at the fear and greed index. When the fear is high, it buys. And of course, this is the famous quote by Warren Buffett. We need these collections so that we can have branding, so that we can have creators jump in and come in with their creativity and start making collections.
So what's the advantage of having these agents, not tokenized, but on NFTs as in a collection? It's a matter of better fundraising, it's a matter of locking up their access or usage to anyone that doesn't have the NFT, or why this protocol?
Well, this fixed supply collection 8041 builds on top of 8004, which is an Ethereum-wide standard that we're building, and that's based on 721. So we have the NFTs, and the idea is we don't exactly know how they're going to work, but we think that an owner of an agent and the fact that it can have agentic commerce, it can transact openly on Ethereum, we think these might all come together into a stack which might eventually create the agentic future that we're looking for. To be more specific, there is an owner. That's why we need the token.
All right, so please give a round of applause to him. Great pitch. So yeah, the next project is Unclonics. So here, I'm very excited to hear what is his project. Right, this is ClickUp.
Hi everyone, my name is Martin. I'm a physicist by training and co-founder of Unclonics. Imagine you have a pinch of sand in your hand and you throw it on the table. As a result, you will get some random pattern, and if you do the same thing millions of times, you will never be able to reproduce yourself. Basically, right now, we created a unique physical fingerprint. And this simple idea of natural randomness could actually help you solve one of the major issues of proving authenticity and provenance of real-world objects. And that's exactly what we are building at Unclonics, a solution that will help you to attest to authenticity of any item in the world and securely bring it on-chain. Our technology is called unique physical signatures. These are labels with unique fingerprint-like patterns inside. They are random and irreproducible even by us. We can print them as stickers or directly on any material, on any surface, and they will be durable for years. If you want simple analogy, our labels are like QR codes, but inherently random and clone-proof. They are also greatly flexible in terms of design, which makes them perfectly suitable for applications, for example, in luxury, where the QR codes are typically rejected for being cheap-looking and ugly. We have a pilot for 2,500 bottles of wine that are going to be secured with our labels. And we have a letter of intent for 20,000 bottles of wine for the next year. We're also discussing the partnerships with Wineback DAO, Mexican tequila producers, and Argentinian luxury brand. Our team is backed by years of scientific work and PhDs, and we are actively onboarding top-tier advisors who will help us with distribution. And few words. Basically, what we do, we create a physical analogy of the ERC-721 protocol. Therefore, our goal would be to become the first physical trust layer, a decentralized registry for verifiable and authentic objects, tangible objects on-chain. Thank you.
Nice. Thanks also for the live demo. I think it was good, and sharing the product, it's very good. I think demos are great. But this kind of like non-forging authentication mechanisms and on several designs, as you would say, has been done many times, no? Also for luxury industry, for several other industries. Do you think and NFCs are pretty flexible already, in a sense. So the main innovation, and do you think that this extra modularity that you are giving to several products is enough for this to take off and win existing competition that's already integrated in LVMH, like any of these big brands?
You mentioned NFCs, right?
Yes.
Yeah, so NFCs, they are quite expensive. It's $1 per piece. We are very, very low cost and affordable in essence. And also, I've spoken a lot with luxury brands. Their feedback is that NFCs, they kind of scare some consumers from the security perspective, because it's electronics, it's kind of safety and stuff. So NFCs are good enough right now for bags and shoes. And if we're talking about cosmetics, perfumery, and other stuff, they don't use it because they can't from technological perspective, and also because everybody will see that it's NFC, and there will be some negative feedback from consumers.
But if you are targeting high quality or high pricing products, say luxury or not, why would you care if the device to authenticate it is $1 or not? And if it's for cheap products, why would you want to authenticate it?
Yeah, I would say that $1 per product, it's only the cost of the NFC itself. And what they do next, they integrate its NFC behind lever, behind other stuff, and in general, in summary, it's much more costly. And also, as I said, there's also feedback from consumers who don't really like using NFCs in general, because it's also about security from the side that if I scan it, I can get hacked or anything, and it's often like happens in crypto, as you know. So yeah, we need something more secure and reliable.
Right. So please give a round of applause. Boom. Okay, great pitch. So the next one, we have the wavy node. So I'm excited as well. Yeah, here is it.
Okay.
Yeah, please welcome.
Hi, first of all, thank you for your time. The last year, a crypto company in Latin America moved in his first year $500,000. They were growing a lot, but they stopped operations because they have a fine of $3.5 million. We know that the future of financial services are based on stablecoins, and we are here to protect companies through AI fraud detection and compliance reports for stablecoin payments. Virtual asset service providers are exposed to interacting with illicit funds because they don't have the infrastructure to detect effectively bad actors. They also need a specific risk compliance for each country where they operate, and the solutions right now are technical and expensive, and having multiple suppliers increases the cost. That's why we develop a regulatory peace of mind in software. We create pathfinding algorithms to detect on-chain patterns across different chains. Also, we create a AI background check of using AI agents, and creating this with a cross-check against blacklist of users and wallets. And we can create the compliance reports that the institutions need to upload to the regulators. We are a dashboard, easy to use, and our business model is based in an annual subscription for transaction verification, threshold reports, and user background check. We're the perfect team to develop this. Frida is an AI specialist, former product specialist at Google, and part of fraud department at Santander Bank. There is a full-stack developer specialized on decentralized infrastructure and a professional crypto researcher. And I co-founded another startup before, working with government, enterprises, and protocols. We launched this year, and we are operating in Mexico, Colombia, El Salvador, Guatemala, and this week we started with Argentina with a 0% churn rate since our launch. So please help us to protect companies based on the future of stablecoins. Thank you so much.
Thank you very much. Just a quick question. Obviously, Chainalysis is probably the better known company in the space that is sort of operating in the same industry. Kind of curious, how do you compare to Chainalysis? Where do you want to compete with that, against them? Right? Is it on pricing? Is it on different market, on different customer segment? Just kind of curious on those points.
That's a good question. First of all, I want to say that Chainalysis is an investigation tool, and we are a compliance company. So it's a different path of onboarding protocols and projects. So we are not interested on creating the background of all the transactions to report this to the fiscal list or something. We are creating this to create the reports that the enterprises need to upload to the intelligent financial units of their countries. So that's one of our main differentiation goals, and our go-to-market strategies is started with startups that are growing and they're VC backed, to having a good stickiness with them and start growing with them, and also start to opening new countries since our clients are growing.
Given that it's AI-based, I assume there will be some sort of failure rate, and there will be a manual process to check those failure rates. If, for example, a background check didn't work out, what percentage of failure rate is acceptable for you guys to still be profitable, so that the business model still works?
Can you repeat the question?
Yeah, so let's assume you run a background check. It gives a false positive, false negative. It gives the wrong outcome. Someone will manually have to check if it was wrong and why. what kind of rate of such occurrences is okay for your business model?
Right now, we are having 7% on all or 10 algorithms that are creating the reports, and it's a good rate for us, 7%, 0 to 7%, depend the pattern with the pathfinding algorithms.
All right, so
thank you so much.
That's a great pitch. Okay, next up, this is going to be last pitch for the first round, which is for Proceed. So hope that he's a successful pitch. Yeah, good luck. Please give a round of applause to him.
Hello, everyone. I'm Luis from FSN, and we are the AI-powered identity and payments platform where you can pay with your face. So let me share a little bit about our story. While deploying telecommunication systems in a very underserved community in Mexico City, we saw the financial divide firsthand. Managing payments for 350 households proved to be nearly impossible, as a whopping number of 45% of adults in Latin America do not have bank accounts. Well, and today's payments are broken everywhere, crypto or not. You juggle 5 different apps, 3 wallets, endless QR codes, and what users want right now is not just another tool, they want simplicity. We think that identity is a true interface of payments. Not wallets, not card, your identity. Whenever you anchor that identity to an AI agent, then users can just get the agent to do anything they don't want to do manually. So that's what we're building here in Efficient. You scan your face and let the agent do the rest. Managing payments, splitting bills, routing stablecoins, and soon also interacting with DeFi. That's just inherent simplicity based on identity. So traction has been fast. We have a certain grant, several hackathon wins, and inductance into base batches 002. We've pressure tested across continents, Japan, Bali, Mexico, USA, and now Argentina also. We have an offer advantage as we will run this in Tokyo for 20 million users and a true living lab in Tokyo Dome City. So we can be the first mainstream entry point without users even realizing their own chain. We have the perfect team to accomplish this. We are 3 engineers based in Mexico City, and we've already turned a project into a business before. We are efficient, and come talk to us. We are looking for accelerators and incubators. Thank you.
Thanks. Thanks. 2 questions. One, why do you choose face over fingerprint? Is this one? And second, like, how do you deal with privacy? How do you make it like compliance in different jurisdictions?
Well, actually, the fingerprint, you need a fingerprint scanner. The same with the palm. So we think the best way to make payments is like the China payments or Asia from only with the face. And we basically create a hash from your face, and every time that you need to confirm your identity with our application, you only read the hash and we compare it on the backend.
In short, it's not hardware intensive, so we can start right away instead of just sourcing everything to China and so forth. So yeah.
So as far as I understand, the face identity phase of the product, it's for identifying yourself, no? And like kicking off the transaction. But in the end, it's a regular wallet that performs the action. So are you a identity platform or are you a payments company? And where is the competitive advantage? What's the differentiation?
Actually, that's the differentiation. It's just not an identity platform by itself. You need the identity to actually perform the payments right away within the system and within the platform. So whenever you anchor that identity that you take from the system of face integration into, the identity platform, you can always integrate payments, and whenever you have that integrated, you can add agents to that idea, and that becomes much more powerful. So it's 3 things into one.
One quick question on this, right? I understand like Mexico, Brazil, Argentina, very cash-driven economies, and this is still the issue, right? Like the user, they have cash and they have physical money, and now the hoop to sort of jump into the digital money, even though it's a face scan, much easier sort of onboarding experience.
Absolutely. Yeah.
The gap from the cash to the digital money is still sort of the hard gap. Kind of curious on how do you solve for that part?
Which part? I mean, just onboarding users?
No, just because most users who don't have a digital wallet or a bank account already is because they are in the cash economy.
Yes.
And then you still need to bring them to the digital economy somehow. So basically sell the cash for digital dollars or digital local currency.
Yeah. Actually, we've run some pilots and we've seen several points of acceptance within those communities that are unserved. And the reason they do not want to go into the banking system is first, well, avoidance of taxes and so forth. But second is much more like onboarding is like, well, tax paperwork in this sense. I mean, it's too complex. And for those kind of people, they don't want really to like incorporate themselves into that and go through all that process. So this is just like, scan your face, you already got a wallet and you can integrate into the system right away.
Okay. Thank you for your pitch. All right, so that's the end of the first round. I'm very excited and actually like I'm impressed at all project pitching and getting all amazing feedback from all of the judges. So okay, so I'm very honored to have here, and we will move for the next session. But before that, please give a round of applause and a massive applause to the amazing project and amazing pitching judges. Okay. So yeah, you know, those judges will be here still. So if you want to connect and those stuff, you can have a time later on. So, but let's go to the next session. So the session is still ongoing. So please stay here. So because the next one is gonna be versus pre-seed, actually seed round to the pre-series A. So you can see like if you what would be like if you pitch to them, then what kind of the feedback you have. So next up, so we have so next up we have Ampli. This is our partners. So I'm very honored to have Ampli here and excited to hear their amazing presentation. Thank you.
Thank you.
Thank you for coming, guys.
Hello, everybody. I'm Patrick. This is Zen. We're from a company called Ampli. First of all, thank you to AKINDO and the whole team for putting this together, to all the founders who have presented so far. This was great, and all the ones that are going to present. Today, we want to talk a little bit about what we've built at Ampli, which is turnkey infrastructure for autonomous capital management. I'm going to start by telling you a little bit why we care about autonomous capital and why maybe you should. And then I'm going to leave the stage to our CTO, Zen, to tell you all about how our solution is turnkey. And I think I should leave most time to him because it's Devconnect after all. So agentic money management is a thing that has been happening in decentralized finance for 10, 11 months now already. And it's a very quickly growing space. It went from 0 to around $200 million in assets under agents within that period of time. These agents, they optimize lending market positions in stablecoins, and they're outperforming human operators by up to 80%. They've moved several $1 billion worth of volume already over the past months. And they offer superior risk management in terms of market surveillance and stablecoin deep risk surveillance. Now, we believe that this $200 million in assets under management is going to grow very, very quickly, very, very soon. Why we believe that is, first of all, the global economies are going to be tokenized. National currencies are going to be tokenized. And eventually, it's going to turn to an arms race after the first big institutions start to put their asset management in agentic hands. We can already see how currently in DeFi the agents are outperforming human operators. Now at Ampli we believe that there are still a couple of obstacles to achieve that global adoption. And this is why we created the Orchestrator SDK, This is what's powering it under the hood. And what the Orchestrator SDK allows us to do is create a wallet management system that is able to segregate the agent's intelligence layer from the execution and policy management on the chain. As you can see, we can listen to the agent's requests. We can validate it in a decentralized fashion through the decentralized Oracle network with Chainlink. We're actually partners in Chainlink's CRE. And then the Chainlink Oracle network can validate the agent identity, and if the transactions are in compliance with the policies that our client set, and only then is the money ever going to move elsewhere. So this is like getting rid of a lot of the trust assumptions that come with this new agentic money management system. So now Zen is going to walk you through the turnkey part of SDK.
Thanks, Patrick. So as opposed to be able to enable this, and maybe just from my heart as being a developer, one of the biggest challenges I've always had with trying to enable new technology is it's sort of hard to onboard. So really my goal at Ampli has been to create developer abstraction, to create an SDK that makes it really simple for developers to onboard, to proof of concept, to implement as quickly as possible so that they're able to showcase it to their organizations that they work with, or for projects themselves that want to deploy any one of our services. And I suppose from an SDK perspective, we multi-platform in terms of support and multi-EVM chain. We do the entire sort of end-to-end flow. What's great with the SDK is you can either take it end-to-end, or you can also run individual components of that SDK itself. We've got things like built-in KYC, integrations with Plaid, built-in on-ramp and off-ramp. So really we give you a full stack to actually on-ramp directly into the space and have it then being driven by agentic yield. Now, having an SDK is one thing, but most organizations, don't just want the developer to be doing everything. So we've got a really powerful management interface. And I think really what we've done from a management interface perspective is we've looked at it at both an individual that wants to sort of manage an entire end-to-end flow, or an enterprise that needs to manage this on a much larger scale. And to achieve that, what we've done is we've got humans in the loop. And really where humans in the loop come into play, it's this ability to define and set specific roles that will manage your environment, that will manage the different policies that you want to specifically set. And having humans in the loop is not just password protected. We've got a really strong MPC layer. So what we're able to do is allow organizations to either use multi-factor authentication or multi-signature wallets. But what you can also do is plug it into your existing IDPs or enterprise identity platforms like Okta, like Azure, or others like that. I think very quickly to sort of run through it, one of the other key facets of what we're doing is we understand that each deployment would be unique. We didn't want to create just a one-size-fits-all interface. We wanted to create unique environments for each of the type of projects that you could potentially deploy. So this could be a fund, it could be multiple DeFi wallets, it could be a neobank, or it could be a vault. And I think maybe to wrap it up, the entire thing is then underpinned by real-time data and reporting. And I know we're out of time, so just quickly, please scan our QR code, sign up for our early access program. We'd love to meet you guys next week, and you guys can start playing with and using our SDK. Thank you.
Amazing. Thank you for coming, and also thank you for your support. It's really great to help us. So okay, so now the next the presentation from our great partners from PEX. Please come to the stage. Thank you for coming. Yes. Yes. Is it? All right. So yeah, before going to start, it's first time for you to come to Argentina. Yeah. So it's first time to come to Argentina for you?
Oh yes, it's the first time. Hi everyone, my name is Marcus. Yeah. I'm the founder of PEX. We're based in Singapore, but as you can probably tell, I'm from Australia. I've lived there for about 20 years. So we're licensed and regulated out of Australia and also the US, and we are planning to get our licensing out of Hong Kong as well. So what is PEX? Thanks for the introduction, Oz. So what is PEX? So very simply put, PEX is a neobank stablecoin. We're the fastest growing neobank stablecoin out of Asia. We're currently focused in Indonesia, Singapore, Malaysia, Thailand, Philippines, Vietnam. And we've made the trip here to Latin America to expand into Brazil and Argentina as well. So I think the real problem that we're trying to solve here is we're trying to enable everyone in the world to have a dollar-based bank account. And in Asia and also in Latin America, this opportunity is not afforded. In countries like Indonesia or in Vietnam, you need a certain amount of money in order to actually open a dollar-based account. And what we've also seen over the last sort of 24 months is the rise of stablecoin. And the reason for that is because of two main reasons. One is hyperinflation that is happening all around the world. And the second is that there's currency devaluation against the US dollar. So hence, that's why there's massive amount of penetration. And this is also the same thing in Asia, where essentially the mass market has no access to US dollar-based account. The banks are based on very archaic and legacy infrastructure that doesn't allow this to be afforded. So what are we doing differently here? We're essentially enabling a interface and a mobile application that combines all of the key banking applications, products, and services together. And how do we do this is that today, the app is already currently live, and we've been live for about 12 months, but we only just launched the app since June, is that we allow for real-time transfers from USDT, USDC to 20 plus different currencies all around the world, from the US, Europe, China, all the way down to Southeast Asia and Australia. For some of the currencies, we settle in 5 seconds, like Indonesia, Vietnam, Philippines, and India as well, all settled from when you click the button to when the money hits the bank account in 5 seconds, and you guys can try it out. The second is QR payment, and as you guys are aware, in Latin America and also in Asia, QR payments are proliferating. Obviously, the pioneer in this is China. WeChat Pay and Alipay has done this extremely well. And we are now enabling this for Vietnam, Philippines, Indonesia, and we're going to be enabling it for Latin America as well. So by next month, we would have the most comprehensive QR payment for USDT, USDC to 8 plus different currencies all around the world. The next is we have tokenized yield, and this is a pretty vanilla product that we're enabling users to be able to earn yield at a very safe and comfortable rate that is backed by US Treasuries. In the future, what we're looking to do is to actually enable real-world asset, actual sort of corporate bonds like JP Morgan or Goldman Sachs that will be tokenized and democratized to be able to allow users to have access to that yield. We enable Visa and MasterCard today as well, both virtual and physical. And in fact, we're giving out free physical cards that our competitors normally charge $100. We're giving it out for free today at our booth just outside. And this works anywhere around the world. It's a US dollar-based card. And then next is the US dollar bank account. So this, it's currently not available, but we're launching next month. And we're partnering with one of the top three US banks in the US to enable people to actually open a US dollar bank account where they can actually receive not just on ACH and FedWire, but also on SWIFT as well, which will be very unique because no one else is doing it at the moment. And then we have our rewards section, which is really more lifestyle. And this is really to encompass eSIMs, flights, travels, miles redemption, all powered on top of stablecoins. Cool. This is a video that was taken here at Stablecoin Summit of a Vietnamese user who's you can't really hear the audio, but I'm just gonna narrate it. He's basically scanning a Vietnamese QR code because he didn't believe that our app would actually do it. So he's actually scanned it, and what you can see there is that the recipient actually shows up. He's going to be sending, I believe, it's 200,000 dong, which is about $7 US. So this is actually live, and this was recorded 2 days ago, actually. Done.
I received it.
There we go. So he's received it in his bank account. So that was in like 5 seconds in Vietnam. And so now we've enabled it for Philippines, Indonesia, and then in Latin America will be next month as well. Awesome. Cool. Thank you very much, everyone.
Great. Thank you for your presentation. I'm also great to have you as a partner. And yeah, thank you so much. So okay, the next one that we're gonna have a next exciting session is gonna be panel discussion. I'm gonna be moderator, and we would love to welcome Black team, Yellow team, and Zero G. So yeah, at the moment we are setting up. So yeah, please be patient a bit. So yeah, while just preparing for it, like I would like to ask everyone, like, that before one presenter asked who is founder here. But anyone here actually currently developer? Oh yeah, like less than half is actually developer. So those developers probably go for the East Global after after this. Actually, it's gonna start today, later on. Yeah, I hope that if you guys will go for it. So then, and plus, today's session is about founders connect. So if you're founders, of course, at some moment you guys need to get raised. So it's quite difficult to get raised, but everyone has chances. And as AKINDO, we very support for all projects to go to the next level. So at the beginning, the Kinjo, who is the founder of AKINDO, recommend you guys to check it out. And I'm also love to recommend because we are a platform to accelerate each project. So if you are looking for the investors, please come to our website, and you guys can have an opportunity to meet not only investors, also L1 or L2 or ecosystem size, because they will give grants, and we provide grants to them. So this kind of opportunity is gonna go for the next step for you guys as well. So if you are just started your own project and you just have an MVP, probably a great opportunity to start with the grants and sometimes hackathon. But we focus in the buildathon though. But with this, you guys have a great opportunity later on, because once you got on board a grant program, usually the project provide opportunity to meet the VCs as well, and not only that, to get grants and to also sometimes marketing as well. So it's a great opportunity to see and check out with whole ecosystems, and of course with the VC, yeah, you guys will have opportunity. Here we want to create an opportunity for everyone to connect the VCs, and we have another session from now on. And after this, I hope you will connect with one of them, and also to go to the next level for a project. Okay, so soon I think all good. Yeah, to come up with. Okay, please welcome our guests. Join us. Thank you for coming. Thank you, George. We have one more, but let me just wait for it. Yeah, while waiting for it, let's talk a bit. Huh? So yeah, for you guys, you guys have been to Devconnect. I mean, as attendees or sponsor, whatever. You have experience before?
This is our first Devconnect, and Zero G. We're sponsoring several things. We had a huge event yesterday. I think there was 250 people that attended. So yeah, it's our first time, but we're very happy, and we'll probably do some stuff next time as well.
Right. And how about you?
Been in crypto for many years, but this is my very first Devconnect.
I see, yeah. It's really the vibes is amazing, and there's so many people here, and I'm so excited to the all developer connect, and not only founders and investors and ecosystems. So yeah, welcome. Thank you for joining us. Okay, so we have our team. Actually, could you exchange? George, could you come to the seat over there for just following the orders? Oh, the Georgie should be that side. Yeah. So Alessio should be here, and you should be that middle. All right. Okay. So let's get started. So first of all, let's start from the introduction. So yeah, the Georgie, could you introduce yourself?
Hi, everybody. My name is George. I lead strategic partnerships at Zero G or Zero Gravity. I also help with our accelerator program and our investments from the foundation side. We are looking to support the next generation of AI builders on our chain. Our Zero G is the fastest and the largest AI L1 chain. We have decentralized storage, compute, and data availability, all in one operating system, all on our chain. So if you're spending a lot of money on your AWS cloud bills, or if you're having issues with decentralized compute or training, come to Zero G. Our chain is super equipped for all AI applications and gaming and DeFi. We have over 400 projects building with us. We have a large ecosystem fund, and happy to talk about it here.
Amazing.
Hey, hi everyone. My name is Marcus. I think some of you guys already know me. I just gave a presentation here 5 minutes ago. We're a stablecoin neobank that's based out in Singapore, operating out all across Asia, and we're looking to expand here in Latin America, which is super exciting. We offer the full suite of banking products and services, everything from off-ramp, on-ramps, US dollar bank accounts, Visa card, MasterCard, yield on US dollar treasury bills, and also we're going to be providing very cool lifestyle services all on top of stablecoins. Thank you.
Hi, I'm Alessio. 20 years in technology, 20 plus. So yeah, I'm that old. After many things, after doing many things in various technology sectors, also in finance, Bank of America, Merrill Lynch, in global markets, I joined the co-founders of Cosmos and was part of the team that launched Cosmos Hub. Then I worked in Polkadot, tried to retire, and then joined Yellow as Chief Technology Officer. And I'm leading head of research. I'm leading the research and development efforts of the decentralized protocol at Yellow that is implemented. We call it as a Yellow network. Thank you.
Thank you for introductions. So yeah, let's get started from the first question. And I'm going to ask one by one for the different questions. So the topic is going to be the why we need a new infrastructure in the ecosystem. Yeah, maybe everyone try to make it, and we will dig into that. So let's start. Let me ask to the PEX team first. Marcus. So why are payments still one of the biggest unsolved challenge in crypto? What do you think?
Yeah, so I think the really interesting thing here is that national payments in most countries now are actually solved very, very well. If you look at Latin America, if you look at Asia, obviously China and US is still sort of trying to solve it, but by and large, it has been solved very well on a national level. But on an international and global level, it has not been, because it's still run by legacy banks and obviously SWIFT. And this is the reason why we exist and what we're trying to do here, not just on the retail level, but more on the business level to facilitate sort of trade cross-border as well. And I think the beautiful part here is that because on a national level it has been solved, where you can transfer money anywhere, let's say in Argentina, for free at 1 to 5 seconds. Now the job here is that how do you connect liquidity in cross-border? So this is where I think that the last piece of the puzzle that needs to be solved. And that's where the infrastructure play comes in.
That's great insight. So yeah, the next one, I would like to ask you, so why is liquidity fragmentation the fundamentals UX problem that institution noticed first?
That's a very interesting question. I think each and every actor in blockchain, every user, whatever the class they belong to, that doesn't really matter. They all feel the pain. Institutions feel the pain, I would say, quite immediately, for a number of reasons. Because it's what do institutions want? Institutions want determinism, price certainty, and what the ecosystem is at the moment. It's a forest of blockchains, basically connected one another through bridges. Now, in an ecosystem where each network is a silo, and a bridge is a huge point of risk, execution is not predictable. So what we are trying to do at Yellow is fundamentally abstracting the complexity they never asked for away, and providing access to a unified layer of liquidity. That's what matters to them. Execution, price certainty. They want to know that they don't have extra costs, extra risk. And that's what we're trying to do. We're trying to simplify and providing just simple API to a very diverse and a very complex universe underneath.
Thank you for your great explanation. So yeah, George, the next question is like what makes AI a necessary infrastructure layer rather than just an application layer?
Yeah, so infrastructure is really important, especially if you want to bring AI on chain. Zero G discovered this when we first started out building out this AI chain. We realized not only does the chain need optimization, but certain components do as well, such as storage, right? So AI workloads take terabytes of data, and at a minimum, gigabytes of data. And how are you going to store that, right? You could use centralized solutions, AWS, GCP, most of you are probably using that. But then there comes an issue about transparency. There also comes an issue about data attribution. And then what about censorship resistance and all these other things that you can inherit passively by deploying your data on-chain? These are things that Zero G had to do in order to actually encourage on-chain builders to store data on-chain. We had to make the data storage network super fast and super cheap. So we're 80% cheaper than AWS. We're 2 gigabytes per second in storage throughput. So that is the fastest cold storage network in the entire decentralized space. And this infra enables and empowers app builders to store more of their data in a... So that's why infra is important for apps. Second, on the compute network, right, what we realized is a lot of these AI models, there's not much transparency on the weights and biases. And so what we said is, hey, why don't we decentralize the compute network? Why don't we decentralize the training itself and allow the community to participate in this? And so the community now can submit their data. They can submit their unused GPU resources, for example, from their laptops. They can invest capital, and they can participate in the training process of these AI models. And then if these AI models generate revenue in the future, because it was on-chain where the contributions were tracked, we can then attribute their contributions and then give them revenue share back or token airdrop back, right? Like all these rewards can be provided back to the contributors. So infrastructure is very much aligned with applications. Our first phase, right? So we launched mainnet about a month and a half, 2 months ago. Our first phase up to that point was focused on building out the infra. And our infra is ready. And so now the next phase is say, okay, applications, come join our mainnet and deploy with us. And so in the next few weeks and few months, you're going to be able to see some really cool AI applications, really cool AI agent networks that are deploying on our chain natively. And they're going to be able to use a lot of the infra that I've just talked about in meaningful ways, right? Not just the speculative meme coin stuff. We're seeing real utility, real things to make your life better. And it's going to be a game changer the way the AI applications run on Zero G.
Yeah, that's exciting. What's gonna say? Yeah, I'm excited to see with your new AI engine. So the next one, let's dive into the new infrastructure stacks. So I would like to ask from the Alessio. So the question is, how realistic is a bridgeless liquidity future, and what will enable it?
I think it's not just realistic.
Yeah.
It is inevitable. It's an urge. It's a demand from the market. So, again, if you look at the demand from the market for institutional traders, like I said before, they want instant settlement, the certainty, without they want depth. But the market at the moment is characterized by an uneven depth. So, rather than looking at bridging as a way to interconnect the networks, and plug networks in. So we will live in a sort of an even increasingly more diverse ecosystem. Our solution is to avoid bridges at all. It's a bridgeless reality where we see blockchains as plugins to our layer of liquidity and depth. So you just, again, like I said before, you want to abstract away the complexity, and you want to provide a layer of simple APIs that traders can access to without necessarily going through a number of hops through the networks or networks. You just provide one simple layer, one simple virtualized layer for accessibility and ease of trading And then blockchains are just plugins.
That's true.
Thank you.
Yeah, like simplicity is actually very important for the mass adoption for Web3, and everyone's trying to do that, like in every ecosystem. Yeah, so exciting to see what's next. Yeah. So the next one I would like to ask to the George. How does AI help solve scaling and data and performance challenges for on-chain apps?
Yeah, so AI applications currently on 0G are all solving unique things. So these applications are targeting different audiences, but in the end, we believe in a multi-agent future, and we believe in a multi-AI app future. So what does that mean? We have projects in the decentralized science field that are taking your healthcare data, your lab reports, your medical data, and they're training it, right? They're taking it, putting into advanced AI models, and giving you personalized recommendations. In addition to that, we have AI agents and AI apps that are focusing on DeFi, decentralized finance. And so what are they doing? They're saying, hey, we can automate transactions for you, automate yield optimization strategies for you, so you don't have to do anything, right? Your grandmother should be able to make swaps on a decentralized exchange. Well, she's not going to go log in with her MetaMask and then make a swap. What she'll rather do is probably use an LLM interface and just type what she wants to do, and then the swaps occur. And so at 0G, this is all possible. We have DEXs that actually use natural language to execute transactions. In the back end, there's AI agents that help optimize the route for the transaction and then optimize the finality so that if you want a fast transaction, it can help speed things up with minimal slippage and price impact. Now we have gaming agents, right? These are AI agents that are actually participating in games with you so that it's more fun and interactive. There's dynamic NPCs, dynamic characters and maps generations, right? Then we have agents that are working on the utilities, so storage or syncing your calendar with travel plans. We even have a travel agent on our chain that's going to be released pretty soon. And so what we feel is that having all these different agents across the verticals is super cool, but what we want to do is make your life easy. And so ideally, there's a single unified interface, a front end, and you type in what you want to do. Or you talk and you say what you want to do. I want to go book a flight to Argentina on these days. This is my budget. So in the background, there should be 3 to 4 agents that are helping execute this. There will be a DeFi agent which has your wallet and has your money, and it's going to take the money out for you. There's a travel agent which is going to actually find the booking websites to execute that booking. And then you have the storage agent, which has your passport or your KYC-related information to actually identify you for the booking, right? And then all these agents work together in the background, and they book that for you. And so that's where we think the future of AI is headed. It's not a single agent. We believe it's more of a multi-agent framework. And for those multi-agent frameworks to work autonomously, the trust factor is incredibly important. You need to trust that it will do right by you. And what we call this issue is called the alignment issue, right? How do you know the travel agency sites are not paying the agent to make you book through them versus the cheapest option, right? So alignment is an issue. And so 0G's infra actually helps provide safeguards. We have AI alignment nodes, which come in and check to see if there's model weights and biases and see if there's any central entity that's coming in and biasing the entire system, right? No other chain is currently focused on these problems. And we think in the future, autonomous agents will be a part of your daily life. And it's really important on the infra side to build these safeguards.
Well, yeah, that's very, very interesting. It's it's like society of human. Everyone has their specialty, but the each AI agent also has specialty. So making the society of AI agent probably next step for that. Yeah, that's very interesting. So okay, let's go to the next question. So I would like to ask this to Marcus. So in which regions are stablecoin payments accelerating the fast, and why?
Yeah. So I believe the question is, where do we see stablecoin penetration being the fastest?
Exactly.
Definitely here in Latin America, for sure. And then, of course, in Southeast Asia, broader Asia. The reason for this is, it's a multivariate reason for each country. I think if you look at China, it's actually probably has one of the largest holders of USDT in the world. Simply because there is obvious currency control. people can't remit more than 50,000 USD equivalent of renminbi out of China every single year. And so the Chinese have been very creative in terms of how they do remittances out of China, which there is trillions of dollars of that are happening every year. When we look at obviously here in Latin America, the interesting thing that I find here, I guess more specifically here in Argentina, is that there is a general lack of trust in local banks, which was because of what happened in the early 2000s, where people were not able to withdraw their US dollars or their money from the local banks. And so the really interesting thing that I've found here is that the top 3 banks in Argentina are not local banks, but in fact either Spanish or French bank. So it's Galicia, BBVA, and Santander. This is really interesting because from where I'm in Asia, growing up in Australia, Singapore, all of the local banks are the largest banks that dominate in each of these countries. So huge mistrust in sort of the local banks here, hyperinflation, and then also currency devaluation is a perfect mix for why people want stable coins or US dollars. So we continue to see that penetration and that adoption skyrocketing obviously over the next couple of years. What's really exciting for us is how do we capitalize on providing a seamless and easy to use interface for people to store, move, and spend their money. Ultimately, I think that's really what it is to broaden the horizon, connect the world in terms of liquidity and the way people move money. I'll give you a really simple example, which is to say, right now for anyone moving money from Argentina to Indonesia, it's like near impossible, probably takes you 2 weeks. I don't actually know because I haven't even tried it myself, but I could only imagine. But what we're trying to do here is to make it in like seconds or minutes as opposed to like days. And I think with the adoption of stablecoin and with enough liquidity in each of these local markets, that becomes a possibility.
Yeah, totally agree. Actually, the payment and stablecoin is a core for our society, and without that, it's really hard to. I mean, I'm talking about fiat though for the stablecoin, but it's sooner or later it's going to be changed for this. Yeah. So, let's go to the next topic. So next topic is about a bit more future. So the topic is what will bring big money on chain. So and of course we are talking about investor here as well, but of course for liquidity to have, it's very important. So I'd like to dive into that. So let me ask to the George first. So the question is what does combining AI plus crypto become a compelling argument for institutional adoption?
Yeah, it's a great question. So institutions actually approach Zero-G because we are a very well-funded, large ecosystem, and we have a lot of the technology already built out. And so institutions from the Web2 space come to Zero-G and say, hey, what is it that you can do for us that we cannot get in the Web2 context? And so then we go to them and we say, are you able to run ChatGPT in your hedge fund? And they will say, no, we cannot. Due to security reasons, compliance, the data provenance, the issue about, we have proprietary data, these hedge funds have proprietary data, they cannot run it through ChatGPT. It's too dangerous for them. It could leak. It could have, hallucinations and all these issues. And so we say, decentralized AI can help you with this. Now, it's too early to say decentralized AI will outcompete, but we can at least say it solves a fundamental problem that you're facing, which is you want to own the data. You have proprietary data that you've spent millions, and in some cases billions of dollars, developing, and you want to store that and you want to own that. If you use a decentralized network such as Zero-G and you have a storage node and the data is there, it is your data. No one else can touch it. If you have an AI model, a lot of these funds and a lot of these companies are using AI models that they've built to help with recommendation on portfolio management, to optimize the efficiency in their company workflow, all these different use cases. So we said, okay, why don't you host these models on Zero-G Marketplace? The compute and the inferencing and fine-tuning and training of these models will occur within TEEs, TEEs are trusted execution environments. You can think of it like a box that no one can actually enter from the outside, and all the computations occur safe, and it's not manipulatable from the outside. And so the TEEs is where a lot of the training is occurring in our compute network. And so it's safe, right? In addition to that, we have the option for ZK. So now you can use zero-knowledge proofs and ZKML to also help verify that the data is secure and unaltered. And so we provide this context of full data ownership and data sovereignty, and then this ability to prevent the data from being adjusted or attacked by external actors, right? And then there's transparency on the model weights and biases that give you these recommendations. When you put a prompt and you get an output, we can actually see what exactly went into that flow of determining that answer. And so all of these things, this full chain of events, can occur very well on chain. And the hedge funds and the institutions that we speak to, they say, this is compelling. Now, the next step of this is to say, how can we show that decentralized AI can perform at the same level and same standards as centralized AI? And that's what we're working on right now. The best way that we can do this is to fund developers who are building in the DeFi space, who are building portfolio management companies, who are building AI agents that will actually search for yield options, and show to the TradFi world that, hey, these are decentralized AI agents that are outperforming the S&P 500. They're outperforming Bitcoin, right? They're able to do things that a centralized solution may not be able to do, and we're able to scale the entire network so it could fit a Fortune 500 or Fortune 100 company, right? This is the way that we're approaching it. We're using an application-centric approach, and our infrastructure is very much built so that the applications can actually create this testing environment and participate in actually improving the overall outcomes of decentralized AI in a meaningful way. And that's what we're focused on.
It's a very sharp point. Yeah, it's great to hear like how it goes, and as a AKINDO, I'm very excited what to see together and for the next years and those stuff. Okay, so let's go for the next question to the PEX. What is the decisive reason institutions may adopt on-chain payments?
The decisive reason, actually, I think for my specific sort of vertical, the financial institutions or the big institutions would be banks, and I actually don't hope that they come on board because then I can go and disrupt them. That would be great for me. No, but I think the decisive reason here is always going to be regulation. They don't really care. I mean, honestly, they don't really care about the technology. Most of these banks, especially that are hiding out in Asia, they present themselves as being sort of forward-looking, but ultimately we know that the legacy core banking system is from the 1980s and probably hasn't really changed. And because it's going to cost them billions of dollars to actually change it, the main reason, decisive one, is going to be regulation that will actually affect it. And the reason why I say this is because I have spent over the last 4 years applying for crypto licensing in Thailand, Indonesia, Singapore, Australia, and also in the Philippines as well. And for a lot of these big banks, it's really about having regulatory clarity before they can actually do anything. And the impetus for that isn't really coming from the banks because they already have monopoly over the market. And so their motivation to want to adopt new technology isn't really there, unfortunately for the retail and also for businesses, because they already have a monopoly in terms of how money moves and how money moves cross-border and how they store money as well. And so, there is, massive amount of inertia from them. So, but in terms of, for them to sort of move, one is regulation, or two is someone's going to come and eat their lunch, which hopefully, if it's not us, then someone will do it one day. And that's where I think a unified sort of Web3 global banking system would become super, super exciting.
Amazing. Yeah, thank you for your giving insight. And to the last one, let me ask to the Alessio. So the last question will be, so what level of the liquidity, depth, and execution reliability do institutions demand? So
it's a very good question, and but the answer is very simple. I mean, it's a long story short. As an institutional trader, what do I expect in terms of depth? Well, I expect a depth that I can size into, firstly. And secondly, I expect an execution that I can trust. The two main components. These two components going hand in hand lead to a consolidated liquidity that is comparable to a regulated normal exchange. That's it. Simple as that. And when we try to analyze the market and predict behavior and understanding demands and just, well, it's on us, the responsibility is on us to wear the shoes of our clients. This is something, if you look at the institutions, when they look at the market, they look at the market and they look at the problems that they have with the market. So in a way, it goes against any crypto normies kind of thing. It's going to take some time, but the ecosystem will understand that. I mean, they're already understanding that. Therefore, we're trying to make is to give the clients, to give the institutions what they want. A consolidator secure layer. They don't want any liabilities like security vulnerabilities or extra hopes like bridges or uncertainties and liabilities introduced by, for instance, even the diversity per se of the ecosystem. If you look at the consensus mechanism, the various economic systems, proof of stake, proof of work, so on and so forth. Diversity is power, but also diversity increases complexity. So again, our take is to abstract this away and just decouple. It's okay, abstracting complexity is very important, but the objective is to decouple the liquidity from the technical aspects. That's the nature of our effort here. So yes, we want more chains to emerge. We want to work with anyone, but it's crucial to find a solution to these key problems, to think exactly as an institutional would. So no, thanks for the question, indeed.
Yeah, great. So today, we had a lot of takes here. Institutional level and also infrastructure level. You guys want to change it all. So I'm glad to have all of you. And please give a round of applause to amazing speakers.
Thank you. Thank you.
Thank you very much.
Thank you.
Thank you.
Thank you so much. Okay, so from now on, we will start next round. So next round is about already as you all see, it's about a demo day, and the stage is gonna be C to pre-series A. So we have amazing judges today and another one. So I'm very excited to see all of the sparks between the projects and the VCs and the investors. So let's move forward and please stay because we were gonna have the all amazing judges. All right. Okay, the stage is set. So I'm going to invite all of them. So please welcome the amazing elite judges. All right, so today, as you can see, we have amazing another judges. So from the WF Ventures and Cosmos and Big Brain Holdings, Maelstrom, Starknet Foundation, World Capital, and Bird Ventures. I'm very excited to see sparks between all judges and projects. Sorry for a bit confusing where it is. I think it should be but I think we should have one more Bird Ventures. All right, so seems like all good now. So all set. Thank you for coming. So from now on, we're gonna have the pitching and the demo day event. All right. So first up is the Decipher Network. Let's see all the sparks and please welcome Decipher Network. Let's go.
Hello everybody, hello judges. I am Patrick, one of the co-founders of Decipher Network, and we're all about making your money work for you, not work for the bank. So imagine this, you've just arrived at Devconnect, you've left your hardware wallet at home, and the Bitcoin price crashes. Oh no, what are you going to do? And in an alternate reality, you get to Devconnect without your hardware wallet, you put your funds on an exchange, but Coinbase gets hacked and you lose all your money. Both scenarios sound pretty terrible, and this is a problem that Decipher is solving. So how does it work? Imagining another scenario, you've got a collateral position Aave, you don't want to keep your funds all in it, you want to do other things in other chains. What you do is you set some triggers, so you monitor your health factor in Aave, and you set a few executions. If the health gets too low, you swap funds from one chain into your Aave and don't get margin called. And our network signs in the middle and verifies everything. You can choose your committee of people you trust. 6 weeks ago, we launched our first product on Decipher Network, Only Swaps. It's the fastest cross-chain swap protocol for EVM chains. And we've got our first 1,000 swaps on there, and we're integrating new chains every week. Why are we going to win? Because we've done this before. Our team is some of the world's experts in threshold cryptography, the technology that underpowers all this. We built the DRAN network, which secures the Filecoin network, and it gets over 3 billion requests every month, and has been running for 6 years with no downtime. We're raising just over $7 million, and we're actually fully committed at this stage, but it's always good to have more strategic investors on the cap table, particularly if you're in the Asia region, and we're planning to do a token toward the end of 2026. Thank you very much, and I look forward to your questions, judges.
Thank you for your pitch. So please give a round of applause. Okay, so please give any question.
Hello, this is Jose from Whale Capital. What would be the utility of your token?
So right now, threshold cryptography hasn't got a permissionless implementation. So the DRAN network, for example, is permissioned. We curate the league of entropy to make sure there are not too many nodes in one region or in one cloud provider, because there's a lot of outstanding research problems in how to incentivize people to be honest in threshold networks. There's some early research there, but we want to take that further, and we think a token will be essential to incentivize good behavior and quantify the security of the network.
Okay, thank you. Yeah.
Anyone else? So please give me.
Wait, sorry, maybe I'm missing an understanding, but what's like the value add versus just using like an existing intent protocol, which are getting faster?
Sure. So the first thing is you can choose your own committee. So most intent protocols now, you're relying on the fact that a certain set of bridge operators are verifying a transaction, or a certain ecosystem people are verifying it. We allow you to elect your own committee. So for self-custodial use of your funds, for example, that's quite important. You could limit it to operators in certain jurisdiction. You could have your friends run operators and verify your transactions. Or for example, certain asset classes between different chains, you could imagine maybe Arbitrum to Base for USDC. They might choose to elect a committee of people from the Arbitrum DAO, people from Coinbase, and people from the Circle in order to verify these things. So completely configurable committees. The other side is the protocol itself allows completely configurable conditions. So I think the first slide said, move my funds, but only when the sky is blue. You can write your own conditions and deploy them to people who are verifying your conditions in order to build totally new protocols, which no other intent protocol supports out of the box right now. So you can imagine it's a bit like Permit 2 on mega steroids.
All right, thank you. Maybe like one more?
Hey man, are you using Randomoo on the back end, or is it a completely different thing?
So we're using threshold cryptography in the background. Yes, that is the same technology that Randomoo was building upon for time lock encryption. And a lot of the same thing applies, really. So you can also have an encrypted order book on chain that you delegate a committee to encrypt your transactions before execution. So there's all kinds of really interesting privacy use cases. But right now we're focused on debanking the world because we think that's the most important vertical.
Amazing.
Thank you
for
very
your pitch. And please give a round of applause to him. So actually, because of the bit of waiting time, so I skipped the introduction. So from now, I would like to have all your introduction each. So maybe from Jin. Jin, could you introduce yourself?
I'm Jin, investment analyst for DWF Ventures. DWF Ventures is the investment arm of DWF Labs, which is a crypto market maker and multi-stage investment firm. Currently, we've got over 1,000 companies in our portfolio across both market making and investments, and looking to find more today.
Hi everyone, I'm Juan. I'm a researcher for Cosmos Ventures, one of Australia's biggest and most active Web3 funds. Super excited to be here and interested to see what you guys have to pitch.
Yeah, I'm Derek. I work at Big Brain on the venture team. Yeah, we've been a venture investor since 2017. Been around, yeah, family office.
Hi everyone, I'm Kush. I'm at Maelstrom, Arthur Hayes' family office. We do pre-seed to Series A investing, based in Hong Kong. Excited to hear more about the pitches.
Hi everyone, my name is Jessie Xiao and I am the Ecosystem Ventures Principal at the Starknet Foundation. Starknet is an L2 on Ethereum, but also we've been expanding in the Bitcoin space and also we've been looking a lot into expanding our privacy. So yeah, very excited to be listening in today.
Hello everyone, I'm Jose. I'm leading the research of Whale Capital Investment Fund. Whale Capital is a liquid fund. We invest in tokens that are powering the infrastructure of blockchain technology.
So yeah, thank you so much for coming today, and I'm excited to see Allspark, and hopefully this stage will lead some opportunity for the future to invest. Okay, so we already have one project, but let's go to the next project. Next project is a blend. Please come to the stage. Yeah, and please welcome the Blend team.
Hi everyone, I'm Manny from Blend. We're creating the global savings layer for DeFi. What do we know about DeFi? It creates incredible yield opportunities, but what it doesn't do is create savings for people. Real savings, the major purpose of it is that it should be available for you at any time, and at any rainy things, just in case you have a flat tire or you need something. We decided to flip this model in a different way to solve this problem. We decided to go the quant way. We decided to build a quant model that helps real quants build a model, and then the AI inside of it, or the blend intelligence, rebalances inside of this policy. We want to make sure that savings is the major focal point and not yield maximization. And as you can see under the hood, Blend has done its job. We did have had a Morpho Vault inside of the Blend strategy that had allocation to stream finance, but 3 days before everything happened, Blend was able to detect that and reallocate our users out of there. So for users, we took the same principle that people are really comfortable. What do they like to save? How do they like to save in TradFi? They like to save in ETFs. Why? Because it lowers the complexity. Nobody wants to manage it. I mean, DeFi is great, hundreds of protocols, and I want more yield sources because that's great. But what we decided to do is that users deposit USDC or their favorite local currency, and Blend does all the sophisticated allocations. But DeFi is still really complicated. And what we wanted to do is take it further. Why build a complicated system that has so much context if you couldn't use the best form factor that's available, which is a chat app? So you should be able to ask and talk to the curator and ask, why did you do this? Why did you rebalance me? Help me understand. So our goal right now is, and we are live, we have about $6 million of TVL. We built smart savings for USDC and ETH and Bitcoin. And our next goal, hopefully with the Coinbase team, is bring on Euro savings, Swiss francs, Argentina peso, Brazilian peso. Thank you so much. Appreciate it.
Yep, let's move on to the Q&A session.
I had a question around distribution. So you talked about like expanding to like a bunch of different markets. I think you guys, like just from your pitch, seems like you guys have a pretty advanced like quant strategy. I'd be curious to get your take on how you're thinking about like the more on like the distribution and like the consumer side of things.
Yeah, so we think about this in two ways. One, we want to own the brand so that you have the Blend app. And second, we're going to have distribution through an iPhone app. But the other way that, and since we've just been talking with like Base and all this, so we're going to be available on the Base app. And so as the Base apps, we'll create mini apps for like local currencies, so like Euro, Swiss franc. And the next thing that we haven't talked about is that Blend is really powerful. It's a curator layer. I'm an interoperability specialist, worked for Across and UMA for majority of my life. And there are stable coins that already use Blend as the backend. And so those strategy, the yield from those stable coins and their own distribution, so USX.capital can go there, it's powered by Blend. All those dollars actually flow into Blend strategy. So we actually have a B2B strategy and a retail strategy.
Thank you for the presentation. I think it's very cool. Are you guys looking for multiple curators, or are you guys the curator?
So it's flexible to how multiple curators coming in and use our quantitative backend, but you can think of us as a meta curator. We're curating other curators because permissionless it's a double-edged sword. Bad actors can come in, so we allow our quant team curate those curators, and that's going to be our goal. That doesn't mean that other curators can't use our system, like stablecoins and all that, to create their own yield sources and tap into that market.
Amazing. Okay, so please give a round of applause to the picture. So the next, we will go to the next presentation. So please come to the stage. Yes. So we have the Habu AI market. Please welcome Habu AI market.
All right. Thank you very much. Hello, everyone. My name is Leon. I'm the founder of Habu. So we are a coordination layer for the agentic finance. The two mega trends in the next 5 to 10 years. One is everything in financial market will be moved on chain. The second one is AI will trade on behalf of human. The challenges, one is about on-chain data collection because it's going to be more and more data. And the second one is how to handle the inter-agent discovery and the collaboration. That's why we have a Hubble. We have 3-layer solution. The first one is a data layer. We basically index every single transaction on chain on different protocol. And we have an agent marketplace where users can easily mint their own data agent, research agent, trader agent, and even more. And the third layer is a coordination framework, which handles the discovery, collaboration, and payment among these agents. So here is a demo on our marketplace. So after you connect with your wallet, you can create an agent. And for each agent, it's a combination of like your data source, your large language model, as well as your prompt, and then you can set the price. And after created, everything it will be minted on chain, and user can use it and make payment through X402. And the owner of the agent can collect most of this payment as a revenue. And after the usage, you can give a score, you can give a comment, and everything will be scored on chain as a reputation layer. And in the future, we're going to help them to track the outcome and the accuracy of this financial prediction. All right, so with all of these agents on our marketplace, we can also have a open source financial collaboration framework. You can deploy that on your machine to automatically trading, and everything the collaboration is on chain is not through our backend. It's through ERC 8004 and the Ethereum. Our team, we are backed by EasyLab. We have more than 30 people in our team. We used to work in top-tier hedge fund in Wall Street, as well as a big tech company in Silicon Valley. So we are fundraising for $5 million, target a 10 million ARR, because we also have the data business. And we are joining us to build the agentic finance. Thank you.
Yeah, let's move forward to Q&A.
Yeah. Right, thanks for that. So I guess the question is related to the coordination layer, right?
Yep.
Now it's with X402, there's already infrastructure for payments between agents.
Yep.
What else does your coordination layer unlock? Like things like creation of swarms, because you guys have proprietary data and everything.
Yep.
What are your thoughts on that?
Well, actually, we have a missing point. We have the payment, we have the identification layer and reputation layer, but how to the agent can coordinate there are so many agents that collaborate together. It could be portfolio management agent, it could be research agent and the trading agent. And they need to have a framework to collaborate. And not only with the agent on our own marketplace, but it could be other agents in other marketplace. But if they follow A2A, which is a pretty famous framework or standard, so they can collaborate with each other with a similar input and output.
Okay, thank you.
Anyone else?
Yep.
Hi, maybe I missed it, but how do you deal with hallucinations and this part that might make the AI
Oh, so
equivocate?
the key is we have every single data, and it's very detailed data. It's a wallet level, maybe the P&L, everything. So all of this analysis is based on the data. It's like type 2 SQL. It's not like out of from the big larger language model. It just create some like a SQL to do really the analysis based on the data, but not on the the memory of the model. Yeah. And the key is we have every single data. We are data vendor at the quite beginning. Yeah.
All right. So if you have any other question?
Yeah, one quick one.
Sure.
So how are you guys planning on making money? Are you guys planning on taking a transaction fee?
Oh, a good question. So as mentioned, we are a data company. We already have more than like 50 clients in the pipeline. They are like the ARR could be like $2 million for now if we deliver that. And also for the agent marketplace, when you create an agent or your users use some existing agent, we are share part of the profit. And in the future, we can treat the agent as an NFT, and we're gonna have the second marketplace. So we will, like OpenSea for agent. And next year maybe we'll have a new assets agent, and the price will blow up and draw a lot of attention to this new assets class. Yeah, it's not because of us; it's because of the ERC 8004 by the AI team of Ethereum Foundation. Thank you.
Right. Please give a round of
Thank you very
applause
much.
on the picture. Okay, next up we have EVVM team. So please come to the stage. Yeah, here you go. Yeah, please welcome the EVVM.
Hello, I am Menta. I forgot about this. We will not going to need this a lot. Hello, I am Menta, and I am here to bring you a solution for institutional adoption and mass adoption. Why I say this? Today we have an issue, a really big issue is that most of the blockchain users and most of the blockchain experience just sucks. And that's because you have your application, your Tinder, your whatever, and you just want to pay. You don't want to go to your fucking wallet and sing something. That's not how it works. That's not how no one's here like it. So, what it does, EVVM? EVVM is a bundle of contracts that we manage to abstract a blockchain. So these fancy words mean that you own your own state, that you own your own chain in top of a blockchain. So you don't need an infrastructure, you don't need an L2. You can just use a bundle of contracts, you have a really good set rules, and you can do some type of crazy things like, for example, let me show you. Okay, so for example, you can do, if you are a bank, let's imagine you're a bank, you can do some trustless execution and some trustless execution environment, some time of validation, and then you can transfer that to the EVVM and set it on a state. Let's imagine all your clients need KYC to do some type of things. You can do that in a simple way and transfer that to a blockchain. You can enable your users in a bank use Aave in a controlled environment. And all of that is able because you have abstracted a blockchain. So these are a few examples of what you can do, but this is like a counter-abstractions. There are a lot of things that you can do with abstraction blockchain. Okay. So questions?
Yeah, let's go for it. Anyone have any question?
Yeah, they will have a lot.
Can you explain the use case that you think is gonna be the one and the first after releasing your product?
It's like a counter-abstraction. When you have an abstraction thing here going, it's like everyone can play with that like he wants. And developers are crazy. So they are going to do crazy stuff. One of the crazy things that one of the developers already do on one demo is like you can, using USDC, you can use PayPal, with CK proofs. That's really crazy, and that's only done because all the account abstraction and infrastructure that you can deploy, it helps to do that. So, for example, you are a bank, and you want to use liquidity on Aave, but you have a lot of regulations that need to be in order to do that. So what you can do is going crazy and build an L2 that it will cost you a fortune, you will need a lot of engineers, or you can use an abstract blockchain. So you have all the state, you will control if you need to turn back, you will have your own gas if you need it, your own, and you can implement how the transaction go. So sorry about the long explanation.
Yeah, thank you. Thank you.
Anyone else?
Okay.
Yeah, I think I'm wondering. I guess like it's a. Let's say someone just wants to onboard. Would they have to like build another privy to like do the exact same cycle?
That's the good thing. You don't need to. I mean, let's imagine someone creates a blockchain or a tool just to do that. So you just can plug and play in your bank or in your institution. It's like I said with Tinder or other application. You just click and pay. If this is a tool to build another tools on top of. That's the good about abstraction.
Okay, so I think that's all for the question. Yeah, please give a round of applause.
Come on.
Let's go. Okay, so next up we have Alfix. Alfix is actually one of the winners during our event, our demo pitch event at ECC. So I'm very excited to hear again. Oh. Right.
Hey everyone, so my name is Carl. I've spent the last 7 years in crypto working.
Please give a round of applause.
Excuse me. So I've spent the last 7 years in crypto working across product marketing research for companies like Starknet, Balancer, and dBridge.
Hey, I'm Yanis. I've studied cybersecurity at ETH Zurich, and for over 3 years, I've been the lead smart contract developer at Spectra, which scaled to over $200 million in TVL.
So hooks recently emerged as a leading narrative in the AMM space. They allow arbitrary logic to be added to pool interactions and really have the potential to disrupt the DeFi market. In reality, however, hook-enabled pools sit at around 4% of Uniswap's entire TVL. Yeah. The reason for that is hook fragmentation. So currently, any new feature requires its own pool, fragmenting users and liquidity.
I'll fix it. With our unified pools, essentially, they work with a flexible hook contract that combines exciting features into a single pool. Think dynamic fees, liquidity rehypothecation, just-in-time liquidity protection, and much more, all of them combined in the same market. But concretely, how do we plan to succeed where others haven't? First, we're focused on modularity and being able to make quick and seamless improvements, unlike our competitors that are focused on isolated innovations. Then, we have a clear plan to capture market share and generate revenue. We're starting with our dynamic fee product that is designed to attract volume, and then once we've reached a solid base, we'll then roll out LP enhancing features that can be taxed without hurting users, kind of similar to the curators, vaults, meta vaults model. And finally, security is non-negotiable for us.
I think that's all the time we have. Quickly want to point out that we are live on testnet and we will be going live on mainnet in the following weeks. So if you want to connect, there's a QR code there. Thank you.
Yeah, I think this is interesting. But in my opinion, like I think the reason why Uniswap hooks like did a hook for each pool is because they wanted to isolate the risk, and they thought that like each hook or pool having its own kind of narrative or messaging like was going to be more effective. I guess it hasn't really been proven true, but why do you feel like having one hook and focusing on the hooks and not like the end yield products is better?
That is definitely correct. Very, very good point. I mean, I guess in DeFi there's always a trade-off, risk, efficiency. I guess you were referring to the tragic fate of Bonnie. Our take is that smaller markets have almost no chance to compete against larger incumbent markets. Even if you bring a super cool, super exciting, innovative solution or feature, you're going to have a very hard time competing against a huge market due to slippage, for instance. So yeah, this is all about making choices, trade-offs. So yes, I would argue there's a trade-off, efficiency, risk. But I think for a project like ours, it's important to take those risks to achieve very good results and change the DeFi markets to something that would be safe and very efficient.
Nice. Thank you so much. Super interesting stuff. So the host was mentioning that you guys were the runner-ups at the previous event. So just wondering what have been like the biggest lessons that you've learned since? Maybe a little bit more in retrospective, but always interested to learn those things.
Very cool question. So that is correct. What we've learned, I guess, managing priorities. I think I think we've lost much time on things that were not necessarily a priority. So I guess, much like many other DeFi projects, something that we regret is not being live already. Like we could have been live 2 months ago if we made different choices. So I would say, yeah, managing your priorities.
Okay, maybe just one more question. So I think in the hooks you mentioned dynamic fees, then rehypothecation, and then LP enhancing features. Could you maybe share a little bit more on what's down the roadmap for you guys on the LP enhancing side?
Okay. Thank you again for this question. So what's done is the dynamic fees. What's currently being worked on is liquidity rehypothecation. So this is already an LP enhancing feature. And this can be taxed without hurting users. Yeah, concretely, that's where we are. Whereas for the other features I've mentioned, it's a bit more longer term. So let's say 3 months and more would be maybe some kind of protections. We're really just waiting and see what gets best adoption in the market. And that's what's so cool about us, is that we're flexible and we can have this advantage of just waiting and then not fragmenting liquidity, not needing our users to migrate to a new pool. We can just stack this feature, an amazing feature that would be invented by maybe someone else than us. So yeah, I think that's what's cool about us.
Okay, thank you.
Thank you so much. And,
yeah. Okay, please give a round of applause to our picks. Okay, next up we have Galleon. So yeah, please come to the stage. And here's Mike.
Good afternoon.
Yep.
Yes. Only one page.
Right. Okay, please welcome the Galleon team.
Yeah, appreciate AKINDO for having us. I'm Neto, not the founder, not the technical, so I will save you some time. Here I'm presenting Galleon, a fully automated multi-agent Web3 operating system. So at the heart of Galleon lies the auto-agent EcoLink, a central intelligent brain. It's a revolutionary system that understands the user's intent, makes smart decisions, and execute on-chain actions without human intervention. So we are making Web3 intervention as simple and efficient as talking to an AI. So a strong project requires validation from the industry's best. We are proud to share that Galleon has achieved significant third-party validation. So on the ecosystem front, we were selected for the Prestige Binance MVP incubation program. We are officially supported by the BNB chain, and we are a proud member of the NVIDIA Inception program. So this is a powerful testament to our technology and the market potential. In terms of resources, our technical merit has been recognized with over 300,000 in grants, including the K Awards from the Polygon, ProRush, Somia, ChainGPT, and Google for Startups. So our traction metrics clearly demonstrate the massive market demand for Galleon. To date, we have scaled over 55,000 registered users. These users have actively engaged with our platform, creating over 120 unique AI agents, and the usage is booming. We have executed over 10,000 agent calls and deployed over 12,000 smart contracts across major chains like Polygon and BNB. Now let's talk about the engine driving this innovation. Our team. So Galleon is built by a lean, high-performance team of 6. The project is led by the founder, Vincent Chen. It's a Web3 veteran with over 6 years of experience and a proven track record, managing over 100 million in DeFi TVL at Bandot. And also, crucially, our co-founder, Dr. Jerry Liu, holds a PhD in AI from Hong Kong University of Science and Technology, and specializes in the very complex field of multi-agent orchestration. So we are currently raising 3.5 million to accelerate our technical roadmap and scale our project, the global market penetration. So our founder's contact is shown here, so we are happy to answer your questions. Thank you.
Just kind of curious from a capability standpoint, what is the most the biggest differentiating factor from other AI agents, frameworks, or platforms?
Yeah, actually I don't know much about other agents, so I can only introduce what this agent is talking about. So it's more like agent. It's an agent platform, and it's more like a game. Like it has many agents. The latest agent just uploaded like 2 days ago is Alpha, Binance Alpha, the trading agent. So it's you connect with the wallet and you put some points into the platform, and it's kind of hedge fund. It's kind of hedge fund, but it's simpler than hedge fund bot. So you can a lot of dimensions. You choose the how much complexity of the auto agent, and then to make profit, and if you make the profit and redeem the points to the actual USDT to the wallet. So this is how it works. And there's a gap. You use the agent. You charge some money, and if you earn some money, earn some points, and then redeem the points to the wallet. And there's the gap in the recharge and redeem. So that's where our profit coming from. Yeah, did that answer your question? Sorry. Yeah.
Anyone else? If you have it.
You mentioned something interesting, like you guys are basically a hedge fund.
Not really.
But basically,
model. Yeah, in the middle.
Yeah, like you guys provide different ways to earn yield.
Yeah.
Do you think the use cases for agents will extend beyond just earning yield? Like for example, like trading strategies, or making recurring payments, or more like flexible workflows around on-chain in like environments. Do you think that's something that you guys are working towards, or is it mostly geared towards earning yield in DeFi environments?
Yeah, we are very at the initial phase. I think we are developing different agents models, and I think the latest one just published 2 days ago. So we have a lot of like a game and other like the chatbot agent. So we're still like developing the exploring phase. So it's not it's, I think the environment you mentioned. Yeah, more like that. Yeah.
Okay, so that's the last. Yeah, so then please give a round of applause. Okay, next up we have the next pitching project is from Black Square. So yeah, please welcome Black Square.
Hey everyone, I'm Adam from Black Square, and we're building privacy infra that fixes user experience. So, currently we have a privacy adoption gap. There is really high friction for anyone who wants on-chain privacy. Users are forced to download exotic wallets, manage new seeds, which is important, and perhaps most importantly, they need to sort of bridge their tokens to the isolated privacy zones. So it's really hard for them to interact with DeFi of sorts. So, well, it seems that they need to actually give away part of their freedom of interaction with stuff in order to get the privacy. So the result is that we're on the conference where basically everyone talks about privacy, and privacy has less than 0.1% market share. So what we're building is public to private translation engine. So no new keys. All spends will be signed using the existing EVM keys. Anyone who holds a public EVM account is able to initiate private transfer. Flexible proving. ZK proofs can be generated on device for maximal privacy, but they can also be delegated from the cloud for much simpler experience. And most importantly, translation RPC. User can connect to the DApp in a way where information will be passing through our RPC node, so that the DApp will not even know that it's interacting with the private wallet. So there is no interaction needed on the sides of the DApp. The messages and transactions will be translated in such a way that it's gonna look like for the DApp like it's interacting with the public account. Compliance, obvious slide for privacy protocols. So we have 2 rows here. For regulated partners, we have cohort level viewing keys, so they can actually see the data of all of their users, like for example for regulated payment providers. And for regular users, we're integrating with 0xBOW for bad actor deterrence. So they do have unconditional privacy, but there is a blockade on the entry. Regarding the team, I'm Adam, 7 years in full-time in blockchain, second-time founder. I was building Aleph Zero with our company, with Damian and Jakub, which is called Cardinal Cryptography. We've been working on Aleph Zero for 7 years, and now we're starting our own project. And that's all. We're here to fix the last remaining problem for privacy, which is usability.
Yeah. Now let's move forward to the Q&A session. So anyone has any questions?
Yeah, I guess I'd love to understand like what specifically do you mean by privacy, right? Because there's like different, because like wallets themselves have different like, you know, cold to hot, and they have like relative levels of privacy, and you know, people define privacy in different ways. Yeah, from like multi-sigs to ledgers, and yeah.
Yes, that's a good question. So what I mean here is token transfer privacy, meaning full on-chain anonymity. So there are, of course, layers for this. Like, for example, there is this networking layer where someone can track someone's IP. What I meant here, most importantly, is the fact that all the transfers that are initiated will not be linked to the public Ethereum address, but instead they will be initiated and ending up in the shielded pool. So, like, yes, this is the, in my opinion, strongest privacy when it comes to DeFi interactions, where there is no linkability to a single EVM address.
A couple questions. How are you doing this? So is this a mixer of a sort?
I mean, it's a privacy solution. I think the word mixer is usually reserved to solutions where you need to send a specific amount and then you withdraw the same amount. So what we have is a fully operational wallet. You can do multiple deposits for arbitrary amounts, and then you can do multiple withdrawals for arbitrary different amounts than the one from deposits. Well, I mean, I think mixer also, like, one thing is that it's usually has this very poor feature, but it's also often associated with illicit funds. So, like, we are operating this kind of a generalized solution where we do have compliance hard-coded into it. So there is whitelisting of deposits. So if you don't end up on the whitelist, you are unable to privately withdraw. And like, as I said, for regulated partners, we have even stronger feature where they can actually look into the transactions of all of the users, but they are private for all the external observers.
Gotcha. So to join the whitelist, you have to KYC or KYB?
No, you don't. There are checks on the entry which are done by like Chainalysis and other companies, and 0xBOW is basically building the system for screening incoming transfers. So based on the complexity, most of the simple transfers are accepted within 1 hour. If it's a complex or a big transfer, it's 24 hours. Like, if it's really complex, it can go up to 1 week for verification. And like, then I would assume that KYC can speed things up.
All right.
Thank you.
Nice. So great sparks to see. Please give a round of applause. Thank you for your pitch. So the next up, we have the Crypto Network. Here you go. Yeah. And please welcome Crypto Network.
Thank you very much. Just going to wait on those slides. Push a button. There it is. All right, so my name's Rick. I'm building the world's shared quantum computer. And I know that all of you, being crypto people, immediately you thought, oh man, when's my crypto going to get hacked? I hope that you know about quantum computers. And I'm here to tell you, don't worry about it. That's not what matters here. What matters here is the extreme levels of value that quantum computers are going to be bringing to the world, not just to crypto. So I'm sitting on results that are showing that one of these quantum processing units is outperforming a little over 1 million GPUs. And when you take into account the operational aspect of this thing, it is using less power than the ASIC mining rig I have in my basement. And that's a massive, massive advantage. So what we're working on is we're trying to build out a full stack implementation that is essentially hitting all of everything you would need in terms of all parts of this market. You can see all 4 of them right here. The first one I had a really easy time with, but the bottom 3 I'm actually here at Devconnect working through. And we're extremely on the early edges of this, and I can't express to you enough how much value this thing is going to bring. I'm very excited in terms of things like liquidity pool optimization that it will bring, and all the other types of problems that it will solve. I am the technical co-founder. I'm a cryptographer by trade. Mostly I've been working on making these quantum computers work the last few days. My co-founder, he's a co-founder at DGen. And we've got LOI from a major quantum computing vendor, so the supply side is covered. I've got 2 pilot projects with classical Web 2 finance companies, and I've got several pilots with universities as well. And I'm going to yield back my time.
Yeah, let's move forward for the Q&A session. So if anyone has any question, please go for it.
I guess what kind of operations do you imagine consumers using with the quantum computers, and what does it mean to I think you said buy block
Yeah, I'll give you the top 3. So the top 3 are AI acceleration. It's going to potentially reduce the power consumption by 10 to 100,000 times potentially. It is things like high frequency trading or any kind of high frequency activity, logistical resource allocation problems. It can solve those problems that might take an hour in about a few seconds. And then of course, there's always the ability to hack, the Satoshi wallets and things like that, which is not really the focus of what we're doing. And if you're worried about that, I'm a post-quantum cryptographer. We've already deployed those solutions a year ago. So.
Anyone else?
With this technology to help validate blocks from a smartphone.
Yeah.
And did you do some research, because this is what Ethereum wants to.
Yeah. So you're talking about the ZK rollups,
yeah,
right?
Yeah.
So I do think it might be possible to accelerate ZK. Mm-hmm. Maybe not with this generation, but I'm hoping, and I'm talking to a couple companies I can't mention on stage, to get a pilot study underway to essentially design the algorithm so that when the quantum computers catch up, we'll basically be able to take advantage of it the minute it comes online.
And do you have estimation of how long it could take till we can?
Yeah. So I am also the proprietor of the quantumdoomclock.com. It says March 2028, which is what Vitalik was just saying a couple days ago. So it'll be roughly 2 to 3 years. I think it is 2 or 3 generations away.
Okay.
That's a 20% chance. We can talk more.
Okay.
Okay, thank you for your pitch. And please give a round of applause to Crypto Network. Okay, the next is going to be last 3 project. It's one project that built on Yellow. So yeah, please go for it.
Hello, thank you.
Fuji, yeah.
Yes. Hi, so I'm Steven, and I'm the founder of Fuji. That's an on-chain options binary platform. So I don't know if you know, but the concept of option is quite pretty old. It's more than 3,000 years ago, but farmers actually use it to actually hedge their kind of future prices of grain, right? And actually this concept has evolved into a $1 trillion industry that nowadays we use for option trading for cryptos, and it was never meant actually for the retail user. Nowadays we have a platform that looks like that, so how can anybody use it that have no idea about Greeks or volatility, time decay? Basically it's not a gamified platform. And this is what we want to do at Fuji. So Fuji, what wants to make is what we want to remove all this kind of complexity of, I would say, Greeks. It's not working. Sorry. So basically, it needs to feel like a game. So if you have an option, like if you have a kind of a market, basically you can turn any market into an option without any kind of all the risk, well, a switch is too long. And so what I'm saying that is because with this kind of platform, we can start to create new kind of financial product, like 100x leverage with no liquidation. Because I don't know if you know that what happened last month at Binance, but basically most of it got liquidated. And this is kind of the idea of Fuji, where we want to make it easy. What? Well, let's talk about it. And actually why we are using Yellow is because we can have instant trade confirmation. Everything happen on chain, like just the deposit and the withdrawal, but all the rest happen actually off chain. So we can have sub-milliseconds basically speed. And it's why they are key partners on what we want to do. And why Fuji, what is kind of the end goal is basically that curators could create their own kind of market, because if you have a spot price, basically you can derive the future kind of implied volatility of that project. So that's one thing. And the second, as I mentioned, is the killer idea of the 100x no liquidation kind of product. And that's it, basically. That's Fuji. Thank you.
Yeah, let's go to the Q&A.
Yeah, so super interesting stuff. I have two questions. So the first one is, one of the big issues that on-chain options or crypto options have is liquidity fragmentation. So how are you dealing with this?
But so for now, basically what we're doing for the MVP, kind of the alpha phase, is that we are the house, so we are providing the liquidity, and then after what we want to do is actually create or order books, you know, like, or actually a 1 AMM what you can just provide to all those different strike prices. I don't know if you know.
Got it. And the second question is, maybe I missed why you want to, you know, like remove having the Greeks and stuff like that, because at the end of the day, like, I mean, you can trade options without Greeks, but you're exposing yourself to massive risk if you don't know, like, you know, how things are changing with respect to another. So is it like a UX thing, or?
Yeah, I think it's mostly UX, like user experiencing, and also it's because I think most of retail don't dare to touch options, you know, because I think the option concept is too complicated. So I think we should not even call it options, you know, like should be called like tap trading, where you know, like, oh, I'm gonna do this amount of trading if the price arrives there at this moment. That's it, you know.
Got it. Thanks.
So just kind of curious. So on-chain options haven't really taken off, at least to me. There's been like multiple steps taken to sort of simplify the process for users. Things like option vaults, things like that make it easier for them to enter. So just kind of curious why you think that maybe now is the time, and why your approach will work. Is there any like soft validation that you guys have done?
I mean, it was not totally related to option, but because I come from prediction markets before, and most user feedback was, okay, we need something shorter time frame, you know, what we are more kind of, we're feeling more the rush of it, so it's kind of more teaching. So the option, I think, is a good way to offer them. It's not, maybe not the other way around.
So something like 0 DTE options?
Yeah, exactly. So,
okay.
So what we're doing now is like 10 seconds event. You know.
Yeah, let's go for one more.
I'm curious how you guys are pricing, are making markets for these things, because you said these are not inherently options, right? So are you guys using Black-Scholes or something else in the models?
No, basically you cannot use Black-Scholes because for that too much long term. So I kind of use like a surface volatility model, and even like that you really have to adjust it for the really short time frame, basically.
All right. Okay. Cool. Okay. So yeah, it's I think it's so good. Yeah. All right. So please give a round of applause. It's so nice to see like the spark between the judges and the projects. So okay, next up we have surfing. This is also like built on the Yellow. So please welcome surfing.
Hello everyone, it's Bertan from Team Surfing. So we just basically built Tinder for crypto. But it's connected with the backend that we are aggregating different perpetual trading platforms and getting quotes from them. So it's live now, you can test it out. So story behind it that we just started at this May, and we won a bounty from Yellow on its Global Prague, and then we joined their Builders program. So afterwards we say that why we just pause on, we have Yellow's Neodex, they are on a high frequency trading platform, which is a perpetual trading and spot trading it has. And let's say add more perpetual trading platforms and then aggregate them. So the current traction is we have like nearly $500,000 of volume thanks to the event that we done 2 days before here. And now Astar, Lighter, and Drift integrations are on the way. So the problem that we want to solve first is the UX. So once we onboard someone from Web 2 or anywhere into the trading, into Web 3, so is this the best way to onboard people on complex terminals? I think it's not. So we just want to build some good UX on it, and we want to fix the fragmented liquidity. For example, if you have some funds on Hyperliquid and you're trading, and you want to move your funds to the Lighter, Astar, or any like Drift, GMX, any leader perpetual trading platforms, it's really hard now, and you cannot even use bridges for it. And we want to unify that balances into position containers, and we want to deploy position containers to each of the top of the leading protocols, and then we want to route tradings of the users behalf of them. So, and also we looked at the leader perpetual trading platforms, and then we have done look at the competitors DEX aggregators right now. We saw that they're not integrated into top 10 as we saw. So we want to do that, unify them all. So you deposited 100 USDC from anywhere, and you want to use it on BTC long, and we are getting collecting codes for you and execute trade behalf of you. And like our position containers are similar to LP vaults that are used on DeFi now. So how we can make money? We now integrated builder codes on Hyperliquid, and also we will open public pools that are connected to the position containers. So we can set some operator fees, and of course, like every Tinder user, we will add some boost. So here's the team of 6 right now. So basically, we will use the funding. Let's divide it by 2 for the LP pools and also for the growth. Thank you so much.
Okay, yeah, let's move forward to the Q&A. So anyone have a question, and please go for it.
Yeah, I think this is interesting. I've seen this format done before, kind of for like meme coins and like previous iterations. Why do you feel like perps is kind of the right asset for this?
Yeah, because of the first one is hype, the perpetual trading hype, because we saw a lot of products, really nice products and multi-chain products enter the game with the push of Astar from BNB, and like Hyperliquid is here for 2 years, and Lighter and Pacifica on Solana, it pushed us.
Anyone else?
Yeah, so I mean, perps, in my view, they're not like the simplest instrument that you can trade, right? Like if you're trading perps, you already know a few things, right? Like, and you might appreciate having a terminal and like seeing complex things. So is it possible that maybe you might be missing some of the people that use perps by simplifying the UX, or do you think that's not the case?
Come again, the question. So the question that is already perpetual users?
That perps are complex instruments, right? People that trade perps are used to trading complex instruments, and they appreciate having like all this complexity that they would see on screen because it has way more information than the simplified UI. So I'm wondering whether by simplifying this UI, you are sort of alienating some of the people that might be interested in trading perps, or if that's not the case, why not?
I think we try to build something that, yeah, even a pro trader can use that when he shuts down his computer and laying on the couch. So you can, we are using APIs in here, and we are using routing system. It's self-custody. So you're a full-time trader, and you just close your computer. You still want to manage your positions and open new ones, but in a good UX. You don't need complex terminals in there. So it's the main motivation why we built that.
Awesome.
Just on the UX side of things, like seems like the app is like very consumer focused. Are there any areas you think would be interesting to integrate in terms of like adding AI to simplify trading or add like new trading strategies?
Yeah, and now the algorithm is the first focus we want to focus on more, and the phase let's see 3 and more, because now it's arbitrary. The card stacks are arbitrary. So with the help of AI and its evaluation on your past works, past transactions, past swaps, we want to build an AI on top of that algorithm. So that's the other phases focus.
Amazing. Okay, so please give a round of applause to Safin. Okay, the next, guys, is gonna be the last project to pitch. So I'm very excited to hear from the Peanuts team. Peanuts team actually, won yesterday's Startup World Cup. So very excited to hear what he's building. Okay, so please welcome Peanuts team.
Thank you. Hey everybody, Hugo from Peanut. You can see the hat. Before I start, super quick question. Who here is a Peanut user already? Please raise your hand. 1, 2, okay, that's pretty good. Amazing. So some of you know this already. Let me get started. So what is Peanut? Peanut is global cash with a local feel. What does that actually mean? Today, moving money is costly, hard, and slow. It's like SMS used to be. It doesn't have to be this way. It should be instant, global, and free. It's just information on some kind of database, some kind of ledger somewhere. If I live in Argentina and you live in Spain, and we're both on WhatsApp, you can just send me a message like this. Like it's fast and instant. Why is money different? It's just information. So what are we doing here? We're doing the same thing through money. On Peanut, we want to suck up all the fiat flows and actually move them on chain, and so that to make it so that if you're a Peanut user and I'm a Peanut user as well, the payment is instant and free. How does it actually work under the hood? Well, Peanut is a self-custodial wallet, and at the edges, we're actually integrated with all the fiat systems. No matter that's UPI in India, we're working on that. Argentina, here in Argentina, Brazil, ACH, SEPA, we have all that live. And that's how we actually interop with fiat whilst moving people on chain onto the Peanut network. I'll skip the slide for time, but we can talk about the next one. I think this one is important. So right now, there's a lot of apps and a lot of payment methods. King in feel, so this is how good the money actually feels, how spendable it is, and how fast the payments actually are. And this is how many people in the world you can reach. So physical cash is king. You can spend it everywhere, but it only works in one country. Cash App and Venmo are amazing, but Venmo doesn't even work in the US. I mean, it doesn't even work in Canada. It works in the US, but doesn't work in Canada, which Trump says is the 51st state. Peanut wants to be here, and that's why we are. So you can actually spend it anywhere in the world, and it feels as good as Venmo or Cash App or Mercado Pago. I'll skip this one, but quick comparison to competitors. Skip this as well. Numbers, we launched about 6 weeks ago. We've been doubling user numbers like every week since then. Super high virality. We have very, very high K factor. This is a snapshot from a few weeks ago. Here you can see all the users. They invite other users. So we have super, super high virality there. And people actually really like to refer other people onto Peanut, which I'm very happy about. Some Twitter stuff. You've probably seen us on Twitter already, but if you haven't, here's some tweets. We can talk about monetization later. And team, so this is me. And this is Konrad, my very handsome co-founder. And yeah, please scan this if you want to talk to us. We have a booth, you might have seen it. And yeah, that's it. Thank you guys.
Okay, let's go to the last Q&A.
Yeah, I think like one issue that I've seen for payments a lot is that crypto users are very different from non-crypto users. Crypto users generally don't care as much about fees, they care more about the rewards. And then pivoting to get these non-crypto users is very expensive and slow, and there seems to be a lot of regional players that kind of have tried it and they just kind of stay in this kind of limbo state where they have strong users and are profitable, but it's very hard to get like a venture kind of scalable outcome. How do you plan to like push through those two barriers, I guess?
Counter question, how many crypto users are there? Like, I don't know, 5K, 10K, like crypto natives, right? I'm not interested in them. Like Gnosis Pay, for example, they push to crypto users, and I think they've kind of reached market saturation in Europe right now. I mean, we found a lot of usage around the Devconnect people, but we also have a lot of users beyond that, like actual normies. Like yesterday I was talking to someone, 58 years old, barely use crypto, and they could use Peanut. So I think we are day one focused on normies, There's no password. There's no seed phrase on Peanut. We interop with Mercado Pago, with like normal banks things. I rent in Lisbon, and my landlady is I think 60 something. I just send her a link, and she just puts her bank account numbers, and then she receives the money in her bank account. She doesn't even know it's crypto. So my answer to this, like we don't do the switch. We're just normies day one.
Yeah. What will be the business model, the monetization?
Yeah, I skipped that slide. I'm happy to talk about it. So what is not the business model is charging on transactions. I think that does make sense. Like SMS died that way. WhatsApp. There's some interesting story I can tell you about SMS. We don't have the time, but WhatsApp doesn't charge, and users don't want money transfer to be charged on. So what can you actually charge on? You can charge on merchants once you actually have distribution, and on TVL. I think these are the two most interesting ones, but happy to discuss at depth.
Or maybe you use the data for other...
As well. Yeah.
Encrypted.
But I think that, eventually we do want to move into privacy, but I think data is less valuable than the other stuff that you get. Depends. Yeah.
Okay, that's all for that
session.
Yeah, please give a massive round of applause. Thank you. So yeah, wow, that was so exciting, and it was so amazing to see all the project between the VCs and the investors and the project. So yeah, now the last actually from now there is no Q&A, but we want to welcome the one project that's actually using AKINDO. So the Aleo, please come, and the Christy here. So Aleo is actually the buildathon partner. So they are using our platform. And if you are here, builders, you guys can actually build with Aleo. So and you can try to keep building, and you can get grants. So yeah, let's hear from the Aleo team. Please welcome them.
Hi everyone. I'm super happy to be here. Thank you for having me. My name is Christy. I'm the head of engineering at Aleo Network Foundation. And today we're announcing Buildathon starting from December going all the way to April next year with 2 demo days like this. One at ETH Denver and one at ETHCC. And the Buildathon is going to have $50,000 up for grabs with $5,000 available every 2 weeks. But let me tell you a little bit about Aleo and why I think it's really cool. So my day-to-day is trying to push this idea of programmable privacy into a reality. And Aleo is the only privacy L1 that's launched to mainnet. So if you're an entrepreneur, if you're a builder, and you want to build something actually useful and private for people to use, Aleo is pretty much one of the very few choices you have because we're already launched mainnet. This all started, actually, let me go to the next slide. We like to describe ourselves as the combination of Zcash and Ethereum. So Zcash comes from the idea that you make blockchains, you make Bitcoin private, but Ethereum is an innovation on another axis where you're trying to make it programmable. And we have the best of both worlds where you can program the level of privacy. So everything is by default private, but you can choose to make it public using smart contracts. And this is all enabled by zero-knowledge proofs, of course, because there's always trade-offs. And if you think about anything that you do in blockchain today, all the dream use cases, day-to-day payments, payroll use cases, so on and so forth, agentic payments, all of these use cases won't be possible without privacy. So that's my little spiel. But for the actual Buildathon, we will have 2 tracks. One is to build a private DeFi application on Aleo. And what's really great is that we are launching our first ever private and compliant stablecoin on Aleo called USAD. It's coming out probably in December or January. Compliant meaning compliant within the US, which is a very high standard. We have been doing a lot of policy work in the background for years. So after that, you'll be able to find build out a lot of very interesting use cases using the private stablecoin. The other track is an open track for any privacy preserving applications. Again, there's $50,000 up for grabs. We're going to launch at the beginning of December. We'll have onboarding calls, taking everyone through the smart contract language, teaching you how to do it. If you want to learn about ZK, if you're a serious builder, you should definitely look into it. So, yeah, check out for announcement. Thank you.
Yes, as AKINDO is very excited to have Aleo as a Buildathon partner. And if you're a builder, and not only if you're a founder, please join and try to build something for the next generation. Okay, so yeah, that's all. And today is, that's what an incredible day. So still like a Devconnect is ongoing, and it was very honored for as AKINDO to have here. And first of all, thank you so much for being here and please giving the feedbacks. And if you guys are founder, there is a next, and you will be the builder to build a Web3 ecosystem. So okay, so that's all. Thank you everyone, and let's give a big round of applause. Woo! Okay, so from now on, we're gonna take a picture. So yeah, please stay here, and we have the all project. Please all founders who pitched, and all investors. That was an amazing day. By the way, guys, we still have the time, and you guys can network over there, and investors here, and that is for your futures, guys. Thank you, guys.
Oh, George.
Founders, please come stage.
Thank you. Thank you, guys. Thank you, guys.
Thank you, thank you.
Come here.
Yeah. Maybe like a... Yeah. Okay.真ん中行った方がいいです。しましょう。
Okay. Okay, okay. I say.
Where's the cameraman? Yeah, can you come?
I say keep on, everyone build.
Okay, keep on build. Okay, it's okay. It's better to hear, or what do you think?
Okay, I say keep and build.
Keep on. Okay, keep on build.
Okay.
All right. 3, 2, 1.
Keep on
build.
Okay.
Amazing.
Yeah.
All right. Thank you, guys. Woo! Thank you so much.